This should be a very interesting. We're going to run through what each of our experts is going to reveal on this call here in just a moment. And, it's this time of year where we start looking forward into 2024. 2023 was a very volatile year. Lots of crazy stuff happened in the markets, certainly geopolitically. We're going to touch on that.
Doug, can you mute for a second?
Uh-oh. Did I say something wrong?
What's going on? A lot of people on. Very exciting. Can you guys hear me?
Yep, we hear you.
Yeah,
good.
I can hear you. I
All
can
right,
hear Doug
that was-
fine before.
Hey, we were getting technical difficulties. That was on me. Doug, you are normally our tech master, and you did nothing wrong here. That was on my side.
Doug is
We just
normally our
went-
tech master. This
Just
is
a note for everyone
newsflash.
we're live now on YouTube. We've got everything going. The cameras are rolling. So we'll refresh. Looks like we've got thousands of people live on the call. If you're here from Paradigm Press and you're on our Zoom, welcome. We are glad to have you. Sorry for a little bit of sound coming through on my side. And Doug, sorry for freaking you out thinking that the tech was off. But we'll do a quick intro just because we just went live on YouTube as well. We want to welcome everyone on YouTube. Welcome everyone from Paradigm Press that's here that took time today live East Coast. It's 3:03 p.m. and we've got a great show in store for you today. We're calling it our 7 Prediction Summit. We've got big ideas from our big thinkers here at the stable at Paradigm Press for 2024. We're probably going to do more than 7 predictions. So we'll do a little bit of over delivery and we'll get into it right now. So Doug, go back to it. I apologize. Do a quick intro real quick. And then we'll get kicked off here with some of our big predictions.
All right. Well, yeah, again, thank you. Thanks, Matt. And boy, I was trying to think what I said wrong, but apparently it was nothing. So that's good to hear. Yeah. So like I was saying, we've got a bunch of predictions coming today. We're going to have individual plays as well that each of the writers is going to reveal a pick on how to play their prediction. So if they get the prediction right, the pick should do well as well. So have a pen and paper handy so you can jot those notes down. Matt, I'm going to just go in and start teasing what our stable of writers is going to be talking about today, if that's all right with you, unless you wanted to jump in on that.
No, go ahead. Let's do a tease. Let's get that agenda out there, and then I can do a little bit of housekeeping, and then we'll kick it off.
And
Okay,
and also, Doug, if I can suggest, maybe after you give this tease, can I say a little something about the nature of predictions, like why we're giving predictions and why it's important?
I think you say that right now.
Do it now. Yeah.
Let's do it.
It's interesting because people always ask, like, oh, if you know these predictions, why aren't you just like trading? Why are you telling everybody? Or why don't you just start a business and do it? And, I started trading in the 90s, but I started professionally trading, i.e. trading other people's money and really taking it seriously every day in 2000, 2001. And I remember at that time, I had never really experienced a bear market. Like when I was a teenager, there was the late 80s crash and bear market. I experienced it a little in 97, 98, but 2000, 2001, I was day trading every day. And I have a philosophy of when I'm day trading, I only go long because you get destroyed going short. And this was in the markets where the market was going down 20% a year, and I was making a living only going long every day. So it was very, very difficult. I had to kind of learn trial by fire. And of course, I started writing about finance and reading a lot more and studying a lot more. And, I ran a hedge fund. My career morphed over the years. But in order to make predictions or at least understand what's going on with all this data and news and what's signal and what's noise, you kind of have to go through a lot of pain. And I'm sure many people who are listening to this have gone through this. Like you can't understand trading and investing until you really lost and understood why you've lost and why others have lost and why some continue to make mistakes, but others don't. Like in a weird way, suffering allows you to create meaning, because without suffering, you would think meaning is, well, I just need to go to Disneyland more often and life will be great then, right? But knowing how bad things can get forces your brain to understand how to avoid that, how to avoid risk, and how to really make an attempt to synthesize thing. Like you could see now, oh, things going on now. This is like what happened in 2002 when everybody thought the world was going to end, but it didn't. Or early 2009 when everyone thought Goldman Sachs and Citigroup were going to go out of business, but they didn't. So you start to assimilate and see recurring patterns that happen through history, either to yourself or things you've read. And this gives you not an ability to predict the future, but an ability to avoid risk. And that we're calling predictions, to basically find where are the opportunities for reward where I'm not going to lose money. And okay, to the question of, well, why don't I just start a business, or why don't I day trade this myself? I hate day trading. It was the worst 10 years of my life. And starting a business is, again, sometimes requires a kind of energy I don't enjoy as much now.
Yeah.
I enjoy this. I've been writing for 20 years. I've been learning for as long as I could about investing. And this is how I love to share, and with these guys in particular. And it's really been a satisfying period of my life, much more so than when I was killing it on day trading and so on. But like having nightmares every night.
Yeah, we're going to, just looking at the group of people here, you're just talking primarily about experience, and the experience in this room is second to none. And we're going to talk about that as we go through today's call. But quickly, I'm going to do a round robin introduction here in no particular order. First, we got Ray Blanco, our senior technology expert here at Paradigm Press. We have Sean Ring. Sean brings the Rude behind the e-letter, the daily e-letter, Rude Awakening. He's a former investment banker living in Italy. We have Zach Scheidt, who is our former hedge fund manager of the Wealthiest 1%. He's also a 3-time Ironman and father of 7. Alan Knuckman, who is not here today, but we do have a recording of him. He is somewhere south of the border, and he is not able to join us today, but we do have his prediction and his ways to trade it coming up on today's call. Of course, Jim Rickards, macroeconomist and former advisor to the Pentagon and CIA, will be joining us around 4 o'clock today with Fed comments and his prediction. Greg Guenthner, our very own chartered market technician, is here with us today. And Byron King, our in-house Harvard-trained geologist. And I'm going to dub you, Byron, our unofficial Paradigm Press historian, if you don't mind. Is that okay?
That's okay, but I just want to add that I went to Harvard before it became this Harvard, okay? This Harvard is not anything like the old Harvard. I was there a long time ago. Different place back then, I assure you.
It changed after you left, huh? That's what happened. That's the story. Well, you're the historian, so it's history, right?
Yeah.
All right, guys. Well, look, let me do a little bit of housekeeping because we got to do this. We're live here. Welcome everybody from Paradigm Press on the Zoom. Welcome everyone that's on YouTube. Welcome to the Jim Rickards readers, Altucher's readers, everybody that's here. In a second, we're going to get kicked off with Sean Ring. He's going to be our first presentation here. But I do want to set the stage for everyone. Earlier this year in October, we had a live event out in Las Vegas. We had 500 people there. And I wake up in my little Vegas hotel and I walk down the stairs and like 6:15 or something in the morning. We're going to open the doors at 7, start at 9, whatever it is. I turn the corner and there are 50 people lined up at the door. So 6:30 in the morning, 50 people lined up the door. We had 500 people in the show. It was an amazing showcase of all the guys that you see on the screen. The only bad news was that was only 500 people. We have 200,000 readers. So we wanted to put on this event. We've got presentations from everybody that you see on the screen. We've got picks. We've got recommendations. We've got lightning rounds. We've got polls for you at home. We've got an amazing show for you today. So if you're wondering what this is all about, this is a summit with free information from Paradigm Press to make you better off in 2024 from the minds that are here. So real quick, some housekeeping. We've got the tech going. If you want to write in and say hello to us, you can. The chat's open. We've got the Q&A. If you're on YouTube, you might as well comment and you might as well give us a like. We would appreciate it. And We've got all sorts of things happening. We've got giveaways. There was a link. If the moderator can put it in there again, we'll throw the link in. Put your name in to sign up for. We're going to be giving out some door prizes at different times as well. So just real quick, some housekeeping stuff as well. Yeah, door prizes. I think you're out. Friends and family, James, you can't win these things.
Oh, James,
so
you're out of luck.
Oh, my kids are logged in. You mean they can't win?
Yeah, they can win. We'll allow them to win. But the other thing that we might do, we might cover investing on the call. It should go without saying that all investing has risk, and anything that we cover here from any of our gurus should not be considered personalized investment advice. So I don't want to get in the way of this thing anymore. Sean Ring, you've got one, always the best t-shirts, and two, a great take in the morning to get my morning started with the Root Awakening. I want you to kick off this summit. Let's hear it.
Well, thank you, Matt, and everyone for joining. My dear colleagues here who are absolutely the best in the business. Good to see you all in the evening here in Italy. It's about 9 o'clock at night, which is why I've got a nice little bottle of bubbly open. And I am, for those of you who have never heard of me, that's okay. I write the Root Awakening in the morning, and I have a 6-hour head start, so it's absolutely no trial to do that. I'm very happy to be able to do that. But occasionally I get to go on Rickards Uncensored and I wear t-shirts just as a goof. I didn't wear any t-shirts to Vegas because I thought it was going to be this upscale event. But being the most overfed and underdressed leadoff hitter in newsletter baseball, this is my t-shirt for today. As Mr. Lennon, he said, dark humor is like food. Not everyone gets it. So Nostrovia to all of you and welcome. And what I'm going to do, my predictions actually they're wimpy. I would prefer to do revisionist history, like what would have happened if Byron King was dating Janet Yellen when they were at Harvard together. That would be like way better, right? Like, God, and we could do some real fun stuff with that. But aside from making Byron blush, I'll just go to my presentation here, and I've got. Probably for those of you, if you read the Rood, it's going to be an odd prediction. It's sure it'll crash, but not before the 2024 market melt up. And I'm oddly optimistic and happy. For the first time in a long time. Not really, but it's incredible. I think gold and the S&P both, and even though I was looking at TLT, it's looking like it's all going to pop. I don't think that it's all roses out there. I think there's an enormous decoupling of the economy and the stock market. And I think we need to stop ignoring that, especially libertarians like me who get excited when things are going to go bad and then they never go bad. Or in the case of the new Argentinian president, sure disappointment. But, well, that's another issue for another time. So here's my prediction, okay? The S&P 500 will reach at least 5,000 before selling off into the next election. The higher the S&P goes off before Jerome Powell starts cutting, which I think he has to, the likelier it'll be that this prediction will come true. I also think, and we've been saying this for a very long time, once Jay Powell does pivot and eventually cut, and he's going to have to do that for reasons I'll make clear, gold will hit $2,500 per ounce, and I think that'll happen before August because, again, reasons I'll say. I think the Fed and the White House will be working a lot more closely than they usually do. I also think, and I hope this is true, and I hope Rick Rule is right about this. If you watch the Rick Rule interview on our Paradigm Press channel, it was great. Rick said, he invests in mining stocks, and for 7 out of 10 years he's disappointed, and then for 3 years he makes more money than God. So I think we're finally going to see that happen, but only after those cuts start. So I think the S&P will continue to rally, but we're not going to have that big pop in gold until Powell's pivot. I think it'll be known in history. Okay, now 2 big cognitive errors that we make, certainly I make, okay? I think we've consistently, over decades, literally have underestimated the strength and resolve of the state. And by the state, I specifically mean our government and central bank to create inflation, okay? So the kind of inflation we're seeing today really isn't all Jay Powell's fault, okay? Yeah, he printed way too much money back then, but what we're seeing right now is Joe Biden opening up the fiscal spigot, or I'm sorry, whoever's controlling Joe Biden, getting Congress to do that. And we're seeing just an enormous deficit load adding to our already insane national debt of soon to be $34 trillion, and sooner than anyone thought it was going to get to $34 trillion. I think the other thing is, and we have this constant overconfidence that the people, the great unwashed, the hoi polloi, judge you public, want to break free of these chains that they clearly revere. So we don't have enough populist pressure on our institutions for them to make a change, which is kind of upsetting. And this was something I kind of talked about in March when the bank bailouts happened, because to me, those bank bailouts were clearly elitist bailouts. Okay, it was crypto, it was green stuff, it was West Coast, Oprah, Harry and Meghan type money that got bailed out, with no real indication that, you know, the Bank of Kansas or West Bumble, wherever, would ever get the same kind of treatment. And because there was no real anger about that, things continue on as they are. And as Jim Rickards, has rightly said, we're just in the eye of this banking storm right now. It's not over yet. We're actually kind of stuck in the middle here in a quiet period. So my axioms, where I'm coming from with this, okay? And again, I'd like to lean on Mr. Altucher's comments and saying our jobs rely on pattern recognition, okay? So I'm going to be 49 in a week. I've been through some cycles. I had a wonderful conversation with Mark Faber last night. That will be on our YouTube channel soon. He's seen a few cycles, okay? And all we're trying to do is go, ooh, that happened before, and it's just like that now. So that's where I'm coming from with these axioms, okay? And one is more recent history. I'm going to say clearly, full-throatedly, that Jay Powell does not want to work for Donald Trump again. I don't think he would mind working for Donald Trump if he absolutely has to, but he doesn't want to work for Donald Trump again. And we've got to assume right now, if he doesn't go to jail and his cases get thrown out, that he would certainly win the Republican nomination and probably the presidency, okay, probably. Joe Biden or his Democratic handlers, whoever Joe Biden is nowadays, Weekend at Biden's, one of our colleagues said, which I think is brilliant, want him or another anointed one like Gavin Newsom to retain the presidency of the Democrats. That's an easy one. Of course, they don't want to give the game away to the Republicans. That's not anything difficult to believe. I think Jay Powell will tacitly agree to help the Democrats retain power. There'll be nothing there written, nothing said, nothing publicly declared. But I think Jay Powell is going to sit in his office and go, what's in it for me right now? And if it's going to be the orange man, I would much rather have that husk in the White House in there again, or Gavin Newsom, who doesn't know anything. Basically Jay will have, the entire Fed to himself at that point. I do think that Jay Powell will start pivoting at the latest possible moment. Okay. So while I think the market thinks he has to cut in Q1, that may not happen. And he will wait until he is damn good and ready to pivot. Donald Trump will, of course, sit there and cry foul and piss and moan the entire time. And in fact, the more he cries foul, the more this strategy will work because it is all completely legal. None of it's out in the open. And I imagine because of this pivot, we are going to see not just the stock market pop. We're going to see the S&P, the NASDAQ. We're going to see the Russell pop as well. I'm going to show you a little bit on that as well. We're going to see TLT pop, bonds. We've already seen crypto start to pop, and gold and silver, I think, will finally have their pop. So it's going to be like Christmas, when Jay Powell starts cutting, especially if you're long gold and silver and crypto. Now, this really hit me the other day. I was looking at Bloomberg, and Biden says, look at my job numbers, Jerome. You don't have to hike anymore. And this was, to me, the first time that Biden in his presidency basically interfered. Now, we put up this game that central banks are independent. None of them are independent of their governments, okay? That they're again, supposed to be independent, they are technically independent, but they will get needled, cajoled anyway. And I think a lot of that has to do with Alan Greenspan and the first George H.W. Bush presidency, when Greenspan kept hiking into the election. And that probably is what cost Bush, besides Ross Perot and a couple other factors. But that certainly had a big factor there. So central bank chiefs, while enjoying independence when everything is going well around election time, don't clearly enjoy as much as they theoretically should. Okay, so waiting for Jerome. Okay, you may have heard this. Treasury Secretary John Connolly, upon the Nixon shock, when we went off the gold standard in the United States, famously said, "It may be our currency, but it's your problem." And the people in that picture, Andrew Bailey, who's the head of the Bank of England, Christine Lagarde, who's the head of the ECB, that is not Mr. Kuroda, I forgot the new guy's name at the Bank of Japan, and Jay Powell, they've got a big problem. The ECB, the Bank of Japan, and the Bank of England cannot cut rates before the Fed does because of capital flight worries. Now, I'm here in Europe. Everything kind of seems hunky-dory, but we have no economy here, okay? And we are getting deindustrialized by the day, because why would you want to own euros when you can own dollars? Okay, so it's a really interesting thing where if you pay attention to economic theory and you keep printing, allegedly your currency is supposed to get weaker and weaker. That hasn't happened with the dollar because of the huge demand for US dollars. If the Bank of Japan or the ECB or the BOE cut before Jay Powell does, and then Jay Powell goes, "Oh, wait a minute, we've had a couple of red hot quarters with inflation and employment," and he hikes, there's going to be a massive problem everywhere else in the world. So they are waiting on him right now. And again, Jay Powell has absolutely no obligation to any of these people, but they are our allies, and their economies are suffering greatly right now. So they're going to lean into the US government and all their lobbyists as much as they can. The other interesting thing, and I think we all have written about this or read about it, United States Treasury interest payments now exceed the annual defense budget. Okay, the second biggest line item in the US budget right now is interest payments on debt that already exists. Okay, so that doesn't include the trillions that are getting added every year, thanks to Joe Biden spending money like a drunken sailor. So there's another huge argument to cut rates, and that's to relieve the U.S. government debt problem. And of course, like I said, I'm going to reiterate this. Jay doesn't want to work for the Donald again. Okay, he'd really rather not have to deal with Trump for the best part of his second term. So everyone's waiting for Jerome to make the move. Now, the other thing is, and this is from the same Bloomberg article, okay, refi is too expensive now. So not only are we dealing with government problems, we're also dealing with companies that have their debt rolling over at much higher rates. So, if you look at, say, tech companies, the really big tech companies are rolling right now. Okay, the Nasy's doing just fine. But smaller tech companies that borrow at higher rates are now borrowing at even higher rates. Albert Edwards, who writes for SocGen, he's one of the few Wall Street economists who can write. And I try to read his stuff, but he got a piece of research from his guys that he couldn't believe. Corporate debt interest payments were going down as interest rates were getting hiked, and he couldn't understand why. And what happened was the S&P 150, so the top 150 companies in America, had refinanced his debt when rates were at all-time lows. So it was kind of like people who were smart with their mortgages. When rates were down at 265, I think that was January 2021 or 2022, everyone refied right there if they could. The big S&P companies called up, Jamie Dimon at JP and David Solomon at Goldman and said, "Guys, listen, I need to swap out my debt. What I need to do is borrow long and I'll lend short." Okay, so basically the opposite of what they usually do. So they're borrowing long very cheaply. And that's part of the reason why we haven't seen this huge knock-on effect from the rate hikes yet, because all the big companies were fine, okay? But the rest of the world companies, their debt rolls over at a much higher rate. So you've got governments that are worried about that. You've got companies that are worried about that. And of course, the consumer now has much higher interest rates. In fact, the Journal just ran an article about how buying a house doesn't make sense right now, which is basically anti-American dream. So there's a lot of other reasons why Jay Powell may need to cut. Okay. Now, again, to Mr. Altucher's point, and this, I was smiling as James was talking about this. Every single trader on average was wrong last year about interest rate hikes. Okay. So if you looked at central bank rates changes, that first column is what the markets actually expected for 2023 in terms of central bank rate hikes, which were, modest to kind of chunky, but nothing like what we actually saw. The second column is what we actually saw, which was sometimes triple and quadruple the number in the left column, which I think is hilarious. So traders got it very, very wrong last year. However, this year they are still positioned to see rates come down. Now, the question is, will they come down? And I think they will, again, for all the reasons I previously stated. I think Jay Powell has to cut. I don't think it necessarily even has to be that chunky. If he gets rates down to, say, 3%, we're probably going to be in a much better situation. I don't think we're ever going to go to the zero band. I think if we go to the zero band again, it's going to be game over this time. I don't know how we're ever going to get out of that mess. So just moving on really quickly, I got 2 more slides and then I'm done. This one is the 4-year presidential election cycle, courtesy of All Star Charts. JC Parrott's a technical analyst I absolutely love. Right now, we're in a seasonally weak period, okay? And this is just normal in the 3rd year, okay? So this is the 3rd year. Usually have a rally in the beginning of the year, which we did have, and then you kind of tend to move sideways, although you could argue we've been moving up. Again, today, it looks like we're moving up. I haven't checked the markets, but that's what I heard. And I can see us getting through this period and then having, because of those rate cuts, a very nice 2024 until people realize that the economy is basically dead. But I don't think that's going to happen until even after the election, regardless of the outcome. So my point here is, while I'm usually a miserable chap when it comes to this stuff, I actually think we're in a good place right now, and you shouldn't be selling anything at the moment. And to further illuminate that point, okay, last thing I just want to mention, I've got the S&P, gold, the IWM is the Russell 2000 ETF, and the TLT is the long Treasury bond ETF, okay? Now, if you notice, I've got 3 columns there. I've got the current price versus the P&F target price. Now, point and figure charts are ancient, okay? And people don't use them anymore. But the one thing that they are great at is giving you a target price. Now, that doesn't mean the target's going to get hit, okay? It just says, because of this movement over this period of time, we can guess this will be where the price lands. Now, if you look at the targets for this, the P&F chart, this is on stockcharts.com. I didn't want to flood it with charts though, says that the S&P is going to go to 56.99. Okay, so massively bullish just based on the charts. I don't think it's going to get up that high, so I'm just going to put a realistic target of 5,000 on it. Gold, much closer though. Okay, so the P&F target price on gold is 25.79. I'll just call it an even 2,500. And one of the things again, if you read the Rood this year, one of the things I've been paying attention to is the IWM, the Russell. It's a lot more volatile, and it gives you clues as to where the bigger stocks are going. Remember, the Russell 2000 are the mid caps, the small caps. So the small caps move up, the bigger companies tend to move up. P&F target price on the IWM is 223. I have it going to 197, but it's really interesting. If the IWM moves that much, the S&P, if you give it the same move, comes out to roughly, I think it was 55, 57. So quite close to that 56.99 target. And finally, and I think, Zach, you were long the TLT, if I recall, currently at 95, P&F has it going to 124. I've got it settling at an even 115 before things go down. So I'm only sticking to the SPS, the SPX and gold predictions, but I wanted to throw those other 2 in there to support my melt up theory for at least the first half of the year. Thank you very much. And over to you, team.
John, yeah, Thank you very much. It's not every day that a Rude Awakening editor predicts a melt up at any point in time, never mind for a whole year. 2024 melt up in stocks and gold. That's worthy of paying attention. And if anyone hasn't noticed, Jim Rickards is not here, but he's coming. And the reason he's not here is because he's dissecting what Powell just said, and it seems to be moving markets in a very dramatic way. I see in the chat someone mentioned the Dow's up 385. A lot of stuff is moving. I see Bitcoin moved up about 1,600 points, $1,600 prior to this call. So that is, we'll hear from Jim exactly what he thinks is coming for.
There's a quick look at gold, Doug. We got gold up $40 in about an hour. So Jerome talks, gold listens.
I can't pull up charts and talk at the same time, Matt. So thank you for doing that. I really appreciate it. Well, I'd like to do a quick introduction for our next speaker, if that's all right. And
Doug, one thing we should do this. We've just got a bunch more people come on. So just wanted to welcome everyone. We do have, if the moderator can send it in, we have a link. We got some door prizes. We got some signed books from Jim Rickards that we've got, the new case for gold. We got some cold storage wallets. We've got gold backs. We've got all kinds of giveaways that we're going to be doing. So go ahead, add your name into that link, click that link and do it. And we got plenty in store for you today. So Doug, let's keep it going. But I just wanted to make sure, welcome everyone. And if you see that link in there, make sure you sign up there for those door prizes because they're coming.
Great. Well, everyone knows on this call, the economic story of 2023 was the Fed's ongoing response to high inflation. And according to our income expert, Zach Scheidt, the next phase of this rate hike story could hand you profits of 40 to 60%. Now, if you don't know Zach, he's produced some of the big and fast moving gains over the years. He made 1,390% on Stratasys in less than 3 months, 850% on Celsius Holdings in the same time frame, and 700% on Upwork in a little over 6 months. So Zach sees a shift that's coming that's going to impact all of us. And if you play it right, you could do very well for yourself next year. So allow me to introduce Zach Scheidt.
Doug, thank you. And Sean, thank you as well. You may have stolen a little bit of my thunder, but I'm very, very grateful for all the things that you shared. I will say that I'll take the over on your 2,500 gold prediction. I think we may have a lot farther to go with gold, primarily because gold is typically supposed to be a great hedge for inflation, and it didn't do its job during this inflationary period that we had over the last 3 years. But gold doesn't always track inflation day for day, week for week, month for month. Over time, it has a tendency to catch up. Gold has been hampered by higher interest rates and a stronger dollar, which acted as a headwind for gold. But now that those are reversing, we're seeing a lot more tailwinds for gold, which is exactly why I think we're seeing, quite the jump today in the wake of Fed Chairman Powell's remarks. And it was really interesting to see. I'm on the call and listening to you, Sean. I've got a little monitor here on the side that I'm watching the news just to see what the headlines are and what's being said from Powell's presentation. And he was on the stage shorter than I ever remember him being on the stage after the Fed announcement. So he got in, said what he needed to say, took a few questions, and got out of there as fast as he could. Meanwhile, the markets are continuing to rally after his statement. We'll say that he's been a little bit waffly as far as just his convictions, which is interesting because up to this point, he's been pounding the table saying, we're going to keep rates high, we're going to keep rates high, we're going to fight inflation, we're going to finish the job, all of that stuff that Powell keeps saying. But my colleague, Frank, and by the way, thank you to our wonderful team who is behind the scenes kind of feeding us some of these sound bites and information from the Fed meeting, sent me this really interesting quote from Powell. And I quote here, "We're very focused on how high to raise the policy rate, period. People generally think that we are at or near that, period. And I think it's not likely that we will hike, although we don't take that possibility off the table." So he's kind of juggling his perspectives here, left and right. Are we going to hike? Are we not going to hike? Probably not going to hike. When are we going to start to cut rates? And the market is saying, all right, we really expect the Fed to cut rates. And in fact, the market is pricing in some pretty aggressive Fed rate cuts over the next year, which ties directly to my prediction. I expect to see long-term interest rates, which will be affected by the Fed policy, I expect to see long-term interest rates cut in half over the next year. And while that may sound scary, and there are certainly some concerns with that, because the Fed rates will come down if we enter a recessionary period, if the economy weakens, there are some tremendous ways to make money from a fall in long-term interest rates. So I want to share my screen really quickly, and I don't have the whole doctored presentation that some of my colleagues do, but I want to share this chart with you because I think it's important for you to see. This is a chart of the long-term 30-year Treasury interest rate. And you can see that we came up well above 4.5% earlier, kind of peaking at the end of November, and we've started to see interest rates pull back. Now, this has been a significant pullback, and it's had a very big effect on the market. It's really what's helping to drive stocks higher. But look at this in the context of where we were 3 years ago. And yes, we're pulling back, but I expect us to have much more of a decline in interest rates over the next year, possibly losing half of its value. So somewhere around the 2%, maybe 2.25% for long-term Treasury rates. So it's easy to see that this could happen and still bring us back to what were fairly normal levels for the last 5 to 10 years. And if that were to happen, what would that mean for our investments, and where could you make the most money? Well, I think the way to make the most money is by investing in long-term Treasury bonds. And before you write me off and before you say, oh, bonds, those are boring, nobody cares about bonds, think about this for a second. Treasury bonds have historically been known as investments for widows and orphans. When I was at the hedge fund, there were certain classes of investments that we would say, those are widows and orphan investments. In other words, they're things that you put people in because they're safe, because they don't move around much, because they don't take on much risk. And most people don't want those things, but those are the safest things for the people who can't afford to take risk. Well, that's no longer the case. Treasury bonds have been very volatile over the last few years. And in fact, there's a lot of potential room for Treasury bonds to move higher, because as interest rates fall, prices must rise. Think about this for a second. I don't want to get too far into the weeds, but I want to explain why this relationship is there and why it's so important. If you have a 30-year Treasury bond, this bond will be worth $1,000 in 30 years. Now, if interest rates are at 4.5%, the Treasury bond has to start at this price. The reason why is because over the next 30 years, every year it has to go up by 4.5%. So a little bit, 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 until at the end of 30 years, it gets up to that $1,000 mark. Now, if interest rates change from 4.5% to only 2.5% or 2%, then all of a sudden, this bond only has to go up by 2% every year to get to that $1,000 mark. So what happens? Well, it immediately has to jump significantly, 50, 70, 80% higher, just so that it can be at this new spot that then climbs only 2% every year to get up to that $1,000 mark, because nothing changes at the end. A Treasury bond is worth $1,000 when it matures, but nothing changes at the end, so that it has to change right now. So as interest rates pull back, long-term Treasury bonds are going to rally significantly. One of the reasons I love long-term Treasury bonds right now is because of two things. One is you're getting a good bit of interest. Remember that chart that I just showed you showed that long-term Treasury bonds are paying 4.3%. So if you invest in that bond, you know that you're going to get that level of interest over the next 30 years. That's a pretty good interest rate. It's a pretty good amount of income, and you know that you're going to get that because the government has guaranteed that they're going to pay it, and they can print money. So even though the value of money may shift over time, you know that you're going to get that dollar figure because the government can literally print money to make sure that it meets its obligations. However, if those interest rates change, what's going to happen is you may recognize a lot of that gain immediately instead of waiting 30 years to get that incrementally along the way. So as interest rates fall over the next year, I expect these long-term Treasury bonds that people think are boring to actually increase by 30, 40, 50% just because rates are starting to pull back. So that means that you can get that guaranteed income while you're also giving yourself a shot at some really big gains. Now, how is the best way to play this? Most people aren't really familiar with investing in long-term Treasury bonds. It's not something that you see on CNBC all that much, and it's not something that most people are really familiar with. Well, there's two ways that I would recommend doing this. The first is that you can go into your brokerage account and you can literally ask your brokerage what treasury bonds they have available for you to buy. It's probably under a tab called fixed income or bonds in your Schwab account, in your Fidelity account, in your E-Trade account. They're available. It's not a section that a lot of people look at, but you can go under fixed income or bonds and you can actually find the treasury bonds, the literal treasury bonds that are offered by your brokerage. If you buy those bonds, you are now loaning money directly to the US government, and the government is required to pay you the exact properties of those bonds. So that's the direct way to do it. And it's not hard to do. It's very easy. You can even call the customer service desk and they'll help you purchase those bonds. Every bond represents $1,000. Now you can buy it typically at a discount right now because it's going to be worth $1,000 at the end of the term. And each bond has a different coupon, or some have no coupons. And so you're able to buy those bonds and receive income along the way. And then they're worth $1,000 at the end of that time period. Now, I will say, if you believe, like I do, that interest rates are going to pull back, you want to look for longer term bonds, like 20-year bonds or 30-year bonds, because those are going to be the most sensitive to changes in interest rates. The shorter term bonds still react to interest rates, but they're not going to react as much. So if you're looking for those 30, 40, 50% gains, a long-term bond makes the most sense for you. Now, the second way, and this might be a little bit more comfortable if you're used to investing in stocks, is simply to buy that ETF that Sean mentioned earlier, TLT. It's the iShares 20+ year Treasury Fund. This is a fund that trades just like a stock. It's up sharply today because the market is reacting to Fed Chairman Powell's press release and his comments in the question and answer period that he had afterwards. But TLT is a fund that invests in a basket of many different long-term treasury bonds. TLT currently trades right around 96.75 in the market right now. Now, Sean had his prediction of $115 or so. That's where he expects it to go, and that would be up over 20%. I think we could see more than that over the next year as interest rates start to move lower and as the economy runs into some resistance and basically as the Fed is forced to cut those interest rates. But TLT is just an easy way, if you're familiar with investing in stocks, to play along with this rise in bond prices, which corresponds to a pullback in interest rates. Now, there are lots of other follow-ons that will happen. As interest rates pull back, it's probably a tailwind for growth stocks as long as the economy doesn't get too bad. So growth stocks could do well in this period. Gold will obviously do well, and it's up sharply. It's up even more as we've been talking because as interest rates pull back, it gives investors less of an incentive to hold things that pay interest or to hold cash and more of an incentive to buy gold. And it also weakens the dollar, which helps to push gold higher. And there are several other plays that we'll be looking at along the way that are tied to this whole theme of lower interest rates. Lower interest rates also makes it, since the dollar is weaker, it makes international companies that do business overseas, it makes them more competitive in overseas markets. So that's exciting as well. But my main prediction is buy long-term treasury bonds. The longer term ones are more sensitive to interest rates. You can buy the individual treasury bonds through your brokerage, or if you're more comfortable trading stocks, buy TLT. I think you'll have a lot of success with that over the next year, and I'm really excited to be playing that along with you. I've got some personal positions built on TLT, and that's my prediction. That's what I'm expecting to happen. Matt,
Awesome.
I'll pass it off to you.
Zach, I like it. Real quick, I just want to let our video team know we're going to be playing the prediction from Alan Knuckman next. So if we want to cue that up, we'll do a little bit of more housekeeping now. I can see it. We just went to gallery view. Jim Rickards is now with us. Jim, let's do a quick sound check.
How's it going, Matt? I can hear you fine.
You're looking great. All right, we've been teasing that you'd be coming on the call, so we've still got a few presentations before we get to you. But I know everyone's going to want to hear. We've got the Fed announcement. You've been digesting it, so we've got a lot of great things coming up. The other thing I'll say, right? You've already seen it. We've got all sorts of stuff. We've got the melt up predicted by Sean. We've got the train sort of leaving the station on if you want to lock in high interest rates or if you want to know a way to play it. through TLT with Zach. We've got a lot more predictions coming up. We've also got, right after we do Alan's prediction video that we're going to play here, I want to get to one of the giveaways. We want to give away $500 in gold backs. So we're going to do that next. We'll put it into the chat and we'll let everyone know who wins. The other thing I'll say is we might be on the call for a little while here. We've got a lot of predictions to come. This is going to be one of these things. I mean, we've got thousands of people. I've seen some people saying, hey, how long are we going? I might have something to do. That's fine if you got to leave, but I can tell you right now, I've blocked off my afternoon. I'm ready to listen to these presentations. I got my pen and paper out, and I'm excited because this is just like when we were in Vegas. We've got a lot of great information. The markets are still open right now. We're rolling. The other thing is at the end of the call, right now, I'm looking at the numbers. We got 7,200 people live on this call. There's something that we're going to do at the end of the call that's a special where we have 221 spots. So 7,000 people, 221 spots. We'll get to that in a second. Very exclusive. So if you got somewhere to be, I'd push that. I'd stick with us and we'll get rolling. So if the video team can play Alan's video now, if you want to share screen, play Alan's video, we'll get that kicked off and then we'll give away $500 in gold backs right after. All right, we'll see if we can do it. We got the tech working here. If not, we can, oh, there we go. All right, I will mute.
Hello and welcome. I'm Alan Knuckman, former floor trader, now with a better way to trade, talking about my 2024 predictions and outlook. So it's been a great year for the bulls. Now there's still some great opportunities, and that's what I'm optimistic about. Optimistic about opportunities. Now there's a sector that has been behind, and we want to talk about commodities and resources. I'm an old commodities guy, been doing this for 35 years, started in the trading pits of the Chicago Board of Trade. And for me, it all comes back to commodities. Nothing you trade doesn't have some sort of commodities or resource common denominator that you got to be aware of. So you got to keep track of interest rates, energy prices. You got to keep track of currencies and so many other things, metals and feed and animals and so forth. So there's always opportunities in commodities markets, because they often have price pop potential. And that's what I'm looking for here in the near term. My prediction is that the start of this commodity super cycle has begun, and we're looking for commodities to double in value. That's 100% in the next years ahead. All right, let me show you what I'm thinking here. And I want to talk about how I trade what I see. Now, what I see is amazing opportunities. Amazing opportunities right now exist in the commodities market. Now, commodities have moved up off their extreme lows that we had in 2020. But if you look at their CRB index, which tracks a combination of the grains, the energies, the metals, and so forth, you can see that we had a big bottom down there with COVID. And since that time, we've had a healthy rebound, but still nowhere near those highs that we had in 2008 at 450. Now, if you adjust that 450 price for a 3% inflation to give us a present value, we would have to get to up to 640 to make new all-time highs. So essentially, commodities would need to double just to get back to where we were in 2008. So where is the laggard in the commodities market that could bring this whole market back? That's straight up simple. Everybody should enjoy the below $3 gas prices that we're seeing right now, because that can quickly change. Essentially, politically, the markets have put in a bottom when it comes to the crude oil market. Saudi Arabia, which has a price control, can turn on their production anytime they want. But guess what? They're not going to do our man Joe Biden any favors anytime soon, like they did back in the fracking time when they turn on the spigots to get market share and crash the oil market. That's not going to happen. In addition, what we're seeing is the strategic oil reserve is getting refilled as we speak with about 3 million barrels a month. That looks to continue as we're down here at 40-year lows in that inventory. So those are two factors that are going to bring that market back. And like I said, that's been the one lagging commodity that we've seen. Where we've seen positive action has been in gold. Gold. Gold has benefited from a number of factors. One has been the declining dollar and obviously some of the safety haven. But we've made new highs in gold, and it looks like it could go a lot higher. If you adjust the 1980 high of about $800 for inflation, gold would have to get up to $3,000 to make new all-time highs. So there's still a lot of upside left here in the near term, even though gold has been very much go. The way to play gold is not gold, the metal itself. It'll be GDX as the gold miners. I'll show you that in just a second. But I wanted to demonstrate here a play that we had from earlier this summer in one of my services, the Profit Wire service, where we saw an accumulation, look at those blue bars, accumulation of positioning in a stock or a commodity that looked like it was down and out. Now, US Steel is X, and X has been long forgotten about, a dinosaur when it comes to the stock market. But we saw some position building and some value in that commodity stock that turned out to be a big winner that made more than 100% with our better way to trade. Now, using that philosophy, I liked what I see in GDX. GDX is the way to play gold. Gold itself is up about 10%. GDX is essentially unchanged in the last year, trading sideways, looking for a big bounce after it had some bullish divergence here in October as well. So there's a lot of value, and the risk reward is really set up in the gold miners, which have the gold in the ground, as opposed to the gold itself, which has already made a major move. Now, at the same time, I want to look at some other commodity stocks. Freeport-McMoRan, copper. They're a copper stock, but if you look at the blue bars in the lower right-hand side there, you're seeing some value and some leverage positioning as well. I like to follow the smart money. I like to follow the people that are in the know and are putting their own money down to put on options positions to build a nice accumulation in that stock. Also, you're seeing that bullish divergence in a sentiment shift with that double bottom and the fact that copper has been on the decline with plenty of time for things to turn. Now, at the same time, I want to show you the last time we did this, my pick for that play was FCX as well. Now, FCX was trading about 36 at that time, and it rallied from 36 up to 52. So a big move in the underlying stock. But again, the way I play are within the money options that have limited risk and plenty of time for the markets to move in our favor. Now, at that time, it was December, and we were buying the June options, buying about 6 months at a time. The June option had the right to be long from 30. It was like buying the stock at 30, but with limited risk and plenty of time for bullish development. Now, that option gained more than 100% on that move that we saw the stock make from 36 to 20. So the lesson to be learned is a modest move, and actually that was a pretty healthy move. A modest move in an underlying stock can produce big gains. So from 36 to 52 is what? $16. So $16 on that stock, as opposed to 100% gain in the money option. A 5% move can produce a 50% gain in the right option, and a 10% move can produce 100% gain in the right option. So to get back, FCX has set itself up one more time. At the same time, I also want to look at Alcoa. So Alcoa here has made a nice bottom base, and you're seeing some leverage buying come into that stock as well. Now, this is a stock, we're looking at aluminum. Aluminum commodity has been on the downtrend for a bit, but we're seeing this reversal of fortunes, and I like the risk reward, and I want to follow the money with those particular players that are big believers with their trades, and I want to follow that to the upside. So when it all comes back to commodities, like I said, I'm looking for this commodity super cycle to accelerate and looking for commodities to double in the next 10 years. That's my prediction here for 2024. And these are 3 ways to play using commodity options as a limited risk vehicle. Number 1, GDX, the gold miners. A June 25 call, which is in the money. It's trading for about 5 right now. Maximum risk is $500. It's got about 6 months of time. Then FCX, Freeport-McMoRan, the June 33 call, trading for 7, deep in the money option as well with a double bottom there. And Alcoa, AA, the June 20 call, trading about 6. So to finish today, my prediction for 2024 is this commodity super cycle has started, as we saw with gold making new all-time highs. But my prediction is that we will see commodities double in the next years ahead. So you've seen my plays, limited risk ways to attack the market. And as I always say, it all comes back to commodity. Thank you.
All right. Well, we've got a lot of things going in the same direction here. We see a melt up, we see interest rates falling, and now we've got a bunch of commodities picks as well. Again, I think a lot of us on the call here are looking at gold and thinking that's a great place to be. So we'll get to some more predictions in a second. Real quick, since I teased it, we had the sweepstakes link in there, and we got time to announce our first winner, which is $500 in goldbacks. Those are those cool things. I know Jim has had them in videos where it's made of real gold and it kind of looks like a dollar, but it's made of real gold. We've got $500 worth of those for someone. If the moderator can go ahead and put that in the chat, we'll go ahead and announce our winner there. So congratulations.
Yeah, congratulations. And I'm going to make a prediction here that we are about to shift gears into a new type of prediction because I'm announcing and introducing one of the most well-respected tech experts in the world today. And his name is Ray Blanco. You probably know Ray, but if you don't, he's been ahead of some of the biggest trends. He was ahead of the cannabis trend. He was ahead of 5G, quantum computing, and he called NVIDIA back when it was $5 a share. And that has turned out to be quite a trade if you stuck on and held on to that until today. He is going to be talking about one of the new hottest trends in the market. And of course, I'm talking about AI. So this AI trend will light a fire under some small tech firms. So Ray, tell us what you got happening in AI.
Thanks a lot, Doug. Thanks for that great introduction, and thank you for everybody for having me here. So the dominant tech story of 2023, as everybody knows, has been artificial intelligence. The world's imagination got absolutely lit on fire at the end of 22 when the OpenAI nonprofit, right, released a new version of ChatGPT. Just the number of use cases and applications for this stuff is just stunning. And it's been the dominant tech story of the year. But the stuff that worked in 2023 may not work so well in 2024. We could call it the tale of two AIs. What worked really well in 2023, on the software side, these huge large language models like ChatGPT, where tens and tens of billions of dollars are getting thrown at huge data sets with proprietary AI models. Microsoft has invested billions in this stuff. Google's actually invested billions and billions as well. And you've got other private proprietary large language models out there. You got to ask yourself, why are you going to go throw so much money at something if maybe you don't have a darned moat around it to protect it? And that is kind of the case with these huge proprietary AIs. You've got what is called open source artificial intelligence out there. This is just basically stuff that is free to use. The code is free to use. You've got just teams of nerds that spend their time improving and modifying and building on these OpenAI code bases. You've got hundreds of models out there. I mean, you could check it out. There's a website called Hugging Face. I mean, what a funny name, but Hugging Face hosts most of this open source AI technology. And if you're an organization out there wanting to implement a GPT-based large language model on data and train your own AI, why are you going to go and use something that is a black box to you, developed at Microsoft via OpenAI or at Google or somewhere else, when you can just go ahead and take an open source AI, tweak it for your needs, run it in-house privately on your own servers instead of the public cloud if you want to, although you could run it on the cloud as well, and save a ton of money. So what we're seeing with a lot of these proprietary, OpenAI being the most famous case, is that these free to use open source AIs are reaching parity in terms of performance and quality of output. So I think we're going to be hearing a lot about that story next year as the market wakes up to the fact that the OpenAIs of the world don't own this, and it is going to be something a lot more broad-based. I mean, we have seen this kind of thing play out in the past, when the internet became a thing, the World Wide Web became a thing. It was largely running on, open source web hosting software. Back then they were running Apache a lot. Again, in the 90s, we saw an open source operating system emerge to become really a dominant operating system in the data center. Linux, I used to be playing around with it a lot back then and working on it a lot back then. But it became dominant in the data center over the Microsofts and other operating systems out there. If you've got an Android-based phone, it's running on a Linux code base that's been adapted to the smartphone. So I think we're going to see this story on the software side really, really start to play out. Not a super investable prediction right now, but it could become so as events develop next year. Now, turning to the hardware side, again, a tale of two AIs. What was the number one hardware play on AI in 2023? Come on, guys, you all know it's NVIDIA.
NVIDIA.
Over 90% of the AI accelerator market, they cannot make enough of these chips, okay? And they can charge whatever the hell they want for them. I mean, a late generation NVIDIA AI accelerator, GPU-based stuff, it could fetch as much as $40,000, okay? And you got to buy it. That's not going to be the case next year. Just a few days ago on December 6th, AMD released their MI300 AI accelerator. The specs look competitive with anything NVIDIA makes. And you're going to be able to buy it and use it and not have to single source with NVIDIA. Okay. I'm not saying NVIDIA ain't going to do really well with their GPUs, but are you going to go pay 40 grand for an NVIDIA GPU when maybe you can go pay half that or less and buy one from AMD? So you're going to see competition enter the market. We're already seeing, I think AMD's offering is going to sell a lot better than the market thinks next year when it becomes available. So this is going to be a big story, guys. And then you're going to get Intel jump on board with their Gaudi 3 AI accelerator. That's also going to be released. It's going to be released next year. We don't have definitive specs yet. When Intel hosts its event, we don't have a date on that yet. We will know, but I am willing to bet it's going to be performance competitive with the H100, which is the current flagship from NVIDIA, and the soon-to-be released H200. It's been announced. It's coming out. It's going to be competitive with these NVIDIA-based GPUs. So I think 2024 is going to be the year to buy the laggards in the AI hardware accelerator space. And that is buy AMD and buy Intel, INTC. So on the big picture AI space, that's going to look really different. Now let's drill down a little bit and look into where I see AI. Excuse me, guys, it's early and my throat is raspy.
Yeah, if anyone doesn't know, Ray, I believe, is the farthest from all of us, even though normally Shauna is. Ray's in the Philippines. So what time is it there, Ray?
Right now it's 5 a.m. So I've been up an hour and a half.
Bright and early. So it's 5 a.m. there. It's 4:05 p.m. here on the East Coast. So
yeah, just got over here, so I'm dealing with a little jet lag. So
we will forgive you.
Looking at the state of biotech as a whole, I'm going to try to share a chart here. Let's hope I don't mess this up.
Let's do it.
Desktop 2. Here we go. So if you guys can see this, it is a chart of the S&P Biotech Index Tracking ETF. Ticker symbol XBI. So this is a 5-year chart. We just hit serious support here in October, at the end of October, near $65. You can see this was support. in 2022, also in 2020. And I believe if you go back to like 2018, you will see this price level was also major support for the XBI. I really like the XBI over other indexes / ETFs like the IBB because it is very heavy in small cap developmental stage biotech, which was what I like to trade and I like to follow because you get huge gains out of those. So we have seen after an atrocious 2021, really bad bear year, an atrocious 2022, really bad bear year. 2023 was shaping up to be the third bear in a row. That has very recently changed with this 25% move off the October bottom, which is really impressive because I don't think we've seen three bad years in a row for biotech since the 1990s. It's been like close to 30 years. I think we're setting up for 2024 to be a major bounce back year for biotech in general, but for artificial intelligence specific biotech in particular. We have seen a really interesting situation for biotechnology. As you know, it costs a ton of money to discover a new drug, develop a new drug, and get it to market. More than 90% of drugs fail, never get to market. They're just a huge loss for developers. Productivity has been falling for years. Back in the mid 2000s, we had a study from Tufts that said it cost on average $800 million to bring a new drug to market. This was the subject of a popular book that was published back then called The $800 Million Pill. The $800 million pill these days is like a $2.6 billion pill because the cost of getting a new drug to market has multiplied in the last 15 years. There is a real productivity issue in biotech. Productivity has fallen. It's harder and harder to discover new drug. Part of that is probably because a lot of the low-hanging fruit has been picked. You got to reach up higher in the tree to get a ripe, juicy fruit that you can run with and make some money on. Number two is that a lot of our methods for discovering and developing new drugs have not really improved to the extent that other areas of the economy have improved. So you're still doing very smart people, very well-intentioned people doing the same things they've always done, working in wetware, and with the human brain, which of course is the most powerful tool in the world, but it doesn't scale like Moore's law does, and working in wet conditions, test tubes and test animals and things like that to discover and develop drugs. Well, now we've got this incredible accelerator out there called artificial intelligence that can accelerate the discovery of new drugs by thousands, if not millions of times over what we've been able to do. And we've got this biotech boom waiting in the wings. We've got startups left and right, and they are starting to make discoveries for formerly undruggable targets, okay, that they can go ahead and build drugs for and come out with new cures. New cures mean huge pharmaceutical tier profits, okay, that will be able to come into the market over the next few years. You've got these emerging pipelines of previously extremely difficult to impossible cures that have been vetted using AI technology, which means we're improving the chances of these being real hits, that they're not going to fail in development, that they're going to make it all the way through the FDA and hit the market and generate billions and billions of dollars in new sales. That in turn, we've heard a lot from these guys that have spoken here, like Sean and Zach, about the change in the interest rate environments. There's going to be a change in the capital markets. There's going to be a lot of money flowing back into biotech next year. Lower interest rates is going to be really good for a lot of these smaller companies that are surviving on cash because they're developing, they're not selling yet. That's really going to feed the biotech boom. But it's also going to fuel a lot of IPOs in the market next year. You're going to see billions and billions of dollars invested. I predict we're probably going to see an AI specific biotech ETF come out next year that could possibly drive billions of dollars into these biotech names that are already listed and trading. So, I think we're going to have a great biotech year. We're already 25% off bottom on the XBI since October. I
Yep.
think we could see a 50% gain in XBI next year. In the AI specific space, we're going to see a lot of news about new drugs discovered. We're going to see drugs go into late stage clinical trials next year. That's going to create a lot of value. And then I'm going to give you a ticker symbol on one play that I really, really like in the biotech tech space. It's called Abcelera. This is a 10-year-old company, hasn't been listed that long. Ticker symbol's ABCL. It's done really nice also since October, about 25% gain in that time, if you guys can see that.
Yeah.
What I like about ABCL is that they've spent 10 years building this AI-driven discovery engine. They were probably the first company out there to play around with generative AI to create new drugs. Generative AI you can train it on chemistry and molecules, and it can build a new molecule from scratch. They're kind of an interesting hybrid business model. They're not really in the business of we're going to discover our own drug and we're going to take it all the way to market. No, we've built this Death Star AI engine. We've got not just the technology, we've got this team in place, this incredible team with a multidisciplinary team that we have. And we're going to go out there and we're going to be the engine of choice for the entire industry. So they're a partnership deal company, and they do deals 3 different ways. First deal is the discovery deal. I'm a big giant, big pharma like a Pfizer or a Roche. And there's a really interesting story there, guys. I should back up a second before I get into too much detail. So one of the companies I really like that is in the Technology Profits Confidential portfolio is Roivant. This was a company founded by Vivek Ramaswamy, which famously everybody knows he's running for president. And November 2022, they went for about $5 million. They bought a 75% stake in a Pfizer drug. Okay, it's an anti-inflammatory drug, very interesting for them for the treatment of inflammatory, gastrointestinal diseases like Crohn's and things like that. They went out, bought 75% stake from Pfizer. Their AI examined this languishing asset at Pfizer, and they bought it for a song for $5 million. It was actually December 2022. They sold it in October for over $5 billion. They made an over 10,000% profit in like 10 months. And it was all their AI engine that identified the potential of this asset, probably helped set a price, and Roche came in and dropped like 5.3 billion on this thing. And also there's like $150 million milestone payment coming up. All they did after they spent 5 million on it was to spend a few $1 million more, get it ready for phase 3 trials. It might be the greatest biotech trade in history, a 10,000% return in just 10 months. And this was an AI story, guys. So it's happening. So let's getting back to Abcelera, which is my play for you guys. They are a top shelf AI centric biotech play. They've got this juggernaut of an AI machine they've built up over the last 10 years. Now it's a cash making machine. They've got this discovery deals that they make with big pharma. Big pharma typically has a cheap access to capital compared to small biotech. They want to retain a large stake in what they own. So a lot of times what they'll do is they'll pay Abcelera. We've got this very interesting biological target. We want you guys to use your magic machines and discover a molecule. Give us 2 or 3 really strong candidates that we can take into preclinical and then get ready for human clinical trials. So they're getting paid for that. But number two, generally speaking, they get profit sharing. If this drug successfully advances into clinical trials, into mid-stage and late-stage clinical trials, they get milestone payments, could be in the $100 million range. Plus, if the drug gets to market, they get strong royalties on commercial sales, could be single or double digit, but they will typically get royalties. So they will be monetizing this stuff for many, many years if it's a good deal that they made with Big Pharma and they gave them a successful molecule. That's one deal. Another deal is the partnership deals that they do with small biotech names. You know, it was earlier this year, there was this brilliant scientist, I think it was out of the University of California system, had this really strong target that his research identified. You know, for this guy, especially in this market that we've had in biotech, for this guy to be able to raise a venture capital and launch a company, very difficult thing to do. Plus, if he does, it's going to take 5 years just to get to the point where he's got a drug for his target, because he's got to raise an entire team. He's got to launch a laboratory. He's got to spend tens, if not hundreds, partner with Abcelera. They've already got, in a matter of months, they've got his molecule. He was able to raise cash. Okay, so they're doing these deals with small biotech all over the place, discovering these antibody-based therapeutics. So here, they'll take more of the risk on the discovery side, but they've got a 50% ownership option on the drug once it goes into human clinical trials that they can exercise or not. Either way, they're in line for royalties and milestone payments. They're just taking they're spending the money to discover the drug for the most part. They're not getting paid like with Big Pharma. So a little riskier, but bigger returns, plus they got the 50% option. The third way they make money is they're going after some of the hardest targets in pharma in-house. Things like T-cell engagers, where you modify the action of the human immune system. Could be in inflammatory conditions, could be in cancer. Also GPCR targets. These are targets on your cells that are responsible probably for about 80% of cell signaling. The biggest trove of potential drug targets in the biotech space. So they're developing drugs in these two special areas. And if they find really good clinical candidates, they might even take them all the way to phase 1. But their goal is to partner with somebody that's got a lot of cash that will then take it all the way to human clinical trials. So I think they're going to have a great 2024. They are probably the best AI biotech pure play out there. Let me stop sharing my screen. Yes, somebody kicked me out. Thank you. But anyway, thanks a lot, Matt and Doug. That's my spiel.
Great. Thanks, Ray.
We appreciate it, Ray, again, especially coming in from at the wee hours of the morning from over there. But you can see there's a lot of different things melting up or that we see coming in 2024. And I agree, Ray, we've been talking about this on editorial calls for many, many weeks. When you combine AI with certain things, and in this case, biotech, there's a lot of reason that can go boom. So I want to do two things real quick here. We still have more predictions to come. But one, I want to do a lightning round because I want to hear from everybody. We've got everybody on here. We got James and Jim and Gunnar and Byron. We haven't heard from you guys yet. I want to do a quick question for everybody, and it's just a fast answer. I want you to say, do you like, for 2024, do you like gold or Bitcoin? So you can only invest in one. Do you like gold or Bitcoin? And just a round number price target. So Ray, you just talked. I'll have you kick it off. And then if we can go around, I think it would go like maybe Ray, James, Jim. We'll just go around on what looks like my screen, I think. But Ray, what do you think? You go Bitcoin or gold, and what's your price target?
I like gold, and I'm going to run with Sean, 2,500. It's going to be a great year for gold.
All right, James. I have a feeling which way you're going to go here, but what do you have for us?
Bitcoin between 100 and 150,000, but there are cryptos I like much, much more.
Wait, hold on. Let's just clarify this. It's not a range. It's a number. It's not two numbers. It's one number.
Well, I don't know then.
He's smart. You see how he was very layered, and we said, all right, on my screen, Jim, we've got you next. I have a feeling which way you're going to go too. What do you like, gold or Bitcoin?
Gold to $2,500 an ounce.
I like it. Byron, what do you think?
I'm going with gold, and I'm going to go with the other guys here. Gold at 25.
All right. Zach, what do you have?
I got to go with gold. I think 5,000 years of history says that it's got some staying power. And I would say that we're going to see a peak at 3,000. It may not stay there, but sometime during next year, I think we'll see 3,000.
All right, Sean.
Well, I'm gold at 2,500, which was my original prediction. But I must say, James, your letter, I've been in your cryptos and I'm up 50% in like a month. So I love your stuff, and if you could elaborate on your other crypto choices, that would be fantastic.
That'll be a side comment, or maybe in the prediction later. We'll see. Gunnar, round us out here. Gold or Bitcoin, and what's your price prediction?
Well, I think that 2,500 is a reasonable target for gold. I think it will surpass that this year. But the trader in me says that as far as velocity is concerned, I think Bitcoin could easily test those 2021 highs up near 68,000. So I think I'm going to say Bitcoin for this, even though I do agree with the price targets for gold.
The fireworks are coming. Okay, the other thing I wanted to do right now, we're on Zoom here. I apologize to anyone that's on YouTube Live. You won't be able to do this. I am going to start a poll. So if you're at home and you're on Zoom, you get to pick an answer here. So I'm going to go ahead. Let me get this this first poll up. And I believe I can make it so all the panelists, you guys can answer too. All right, this is basically, what do you really want in 2024? So I'm going to go ahead and launch this poll. It says, what do you really want in 2024? There are several answers here. Do you want more money? Do you want more knowledge and market experience? Do you want better connections? Do you want repeatable gains? Do you want to travel more? So we'll give this another like 15, 20 seconds. We want to see what the crowd, this is going to be, I will share the poll with everybody. So we get to see, we're crowdsourcing some answers here. We'll get to see what market sentiment looks like here. Do you want more money, more knowledge, better connections, repeatable gains, or do you want to travel more?
Yeah, there are people showing up in the chat and they're just putting their answers in there, which is great too. We get to see live, but there's a lot of repeatable gains, a lot of more money.
I feel bad cutting this poll off, but I'm going to do it. I mean, we're at 2,200 people and it's like skyrocketing. Just get you get 5 seconds. 5, 4, 3, 2, 1. All right. We're sharing the results. Here we go. Can you guys all see it?
Repeatable gains.
More money was close.
It was.
So in 2024, it looks like people want the repeatable gains. And again, we've got the guys on the call here. We've got a lot of smart people. So hopefully at Paradigm Press, we can make that happen for you. But that's surprising, right? More travel, more money, out of all those things. People want the insight to make a trade and be able to keep doing that and get those repeatable gains. Awesome. We'll have some more polls for you guys a little bit later. We've also got more giveaways. I just got an okay from somebody. We can give away more gold backs. So we're going to do that. Plus, we got some new case for gold books. We got some cold storage wallets. So we'll do that. But we're going to keep going here with the predictions. All right. Up next, we've got a man that I've worked with for well over a decade here. He's a geologist by trade. And after getting his degree from Harvard, and this was the good, cool Harvard back in the day, Byron went to work in the oil industry. He's also not just a rock kicker, because after he had done that, he was working with golf. He decided he wanted to go into the Navy. So Byron served as a flight officer in the Navy, and he's made a name for himself here at Paradigm Press, being a trustworthy source, natural resources. Doug said it earlier. He's almost like a historian of knowing what's going on. And Byron, you have a great insight, whether it's markets, whether it's resources, and just America. So we're glad to have you on the call. We appreciate you being here. And you're up. What's your prediction for 2024?
Oh, I've got a great prediction. First, I want to say that I've been working with you for a long time, and I really appreciate it. Zach mentioned something earlier that brought back a memory. Speaking of the Navy, Zach mentioned that falling interest rates are a time to get into bonds. And back in around 1984, 85, I was deployed on an aircraft carrier. I was out of San Diego. You sail to the other side of the world, and you are like totally out of touch with everything. Before I left, I had not a big, but I had a modest, little brokerage account. I lived in San Diego. I had a little brokerage account. And I go to my guy and I say, hey, listen, I'm going to be gone for a long time. What am I going to do? I can't deal with the market and everything. He says, oh, he says, I put you in this little bond fund we have here. And I said, okay. So when I left, the interest rates were, believe it or not, they were like 13% when I left the US. And I came back like 7 months later and interest rates were down around 10%. So that was like a 3% drop, which sounds like a big number today, but I mean, it was, just about a quarter of what the interest rates were back then. I came back and my bond thing had like more than doubled. And I looked at my broker. I hadn't looked at it in 7 months. So like, if you're going to sail away to the other side of the world and you're not sure what to do, and you think interest rates are going to drop, yeah, get into bonds, because those things can pay back quite a bit for you. So anyhow, we have 7,300 people, and I'm just so flattered that people would take their time to listen to what we have to say. I mean, it's really rewarding. But we do this for you. I mean, we're here for you.
Yep.
Well, this is a predictions. So you said, Byron, what's your big prediction? And I thought about it, and I said, well, I could talk about this stock or that stock. I could talk about this oil company or this gold mining company or whatever. But I have a different sort of prediction. It's a geopolitical prediction, and it's coming true to my mind, before our eyes every day. But I think 2024 is going to be the year when it hits us really, really hard, when the world finally wakes up to what's going on. And I've entitled my prediction the death of the petrodollar. And if I can find it, here it is. Yeah. One moment here while I share my screen here.
You're going to be better at tech than I am after the beginning of this call. I can tell you that much.
Really? Okay. Oops, there we go. Okay, there you go. Okay. My prediction for 2024 is the death of the petrodollar. And you said, well, what are we talking about? Well, first of all, what is the petrodollar? Okay. What is the petrodollar? Let's do a little history. Back in 1993, which was 50 years ago, Israel got invaded by Egypt and Syria. The Yom Kippur War, it was October 6th of 1973. And the way you can remember it is that 50 years and a day later, on October 7th of this year, Israel got attacked again, But so the Yom Kippur War of 1973, they got invaded. Israel was really on the ropes. The US under President Nixon sent massive military aid to Israel. And the Arab nations, as you can sort of understand, they were mad about that. Hey, why are you doing that? We're going to embargo oil to the United States. So they did. And it doesn't mean that there was less oil. It just meant that the world logistics system was screwed up. But anyhow, we had an internal energy crisis in the US with gas shortages, gas lines, whatever. I've got a couple of images there from way back when. A couple of people in the chat room were saying, oh, you guys are all young. I take exception to that. I don't want to brag about my driver's license or anything, but I'm old enough to remember this stuff. I remember being at Harvard. Oh, by the way, it was a different Harvard back then, as I said earlier. This is not today's Harvard. I was at that Harvard, not this Harvard. And right out the window of the freshman dining hall was a Gulf station, a Gulf gas station. And I remember seeing these lines on Massachusetts Avenue, Mass Ave, all the way down the street. Just block after block. The Cambridge police were out there directing traffic and everything. People were getting into fights over gasoline and everything. It was actually one of the things that got me interested in going into geology. Was, hey, what's this? What's this oil stuff all about? Well, the solution at the time was to send Henry Kissinger to negotiate. And in between the end of 1973 and into 74, he worked it out with the Saudis and made a deal. This is really simplifying history. I'm totally distilling it to a real essence. But Kissinger worked out a deal with Saudi Arabia and with OPEC that they would price their oil in US dollars. And it's kind of, okay, no more embargo. And, you guys price your oil in dollars. Okay. Well, okay. They agreed to that. What was the bargain? Well, they'll price the oil in dollars, and then the US would guarantee military security for the Persian Gulf area, for Saudi, for UAE. I mean, we were still, friendly with Iran at the time, But you guys price it in dollars, and we will keep the world secure. We'll use our Air Force and our Navy and our Army. We'll keep it all secure for you. And that is where we get petrodollars. Okay. Now, over the last 50 years, there are two key things that have really gone into, you know, the American mindset. There are things that Americans, we just believe this stuff in our deep down in our DNA. One is that the dollar is great. Nothing can happen to the dollar. The dollar is, you know, I mean, it's just rock solid. The dollar is the dollar. And the other thing is that the military, the U.S. military is just unbeatable. You know, we have the world's best military. You ever hear politicians say that? We have the world's best military. And you know what? I spent, between active and reserve, I spent 30 years in the U.S. Navy. I love our Navy. My son is in the U.S. Army. I love our U.S. Army. I think our military has problems, but it's you know, it's fundamentally, there's a lot of goodness there, everything else. But there's something in the American mindset that's just sort of over the top. The dollar is great and our military is great. And we have a dollar or a military solution to everything, okay? Hold that thought, hold that thought. Because for half a century, this petrodollar has been the foundation for the growth of a lot of things, especially US government spending, as well as our national liquidity and solvency. We don't have the government never goes broke. It always just writes a check. What it writes a check against is a whole different thing. It's kind of like having a credit card that you run your bills up on the credit card, but you never have to pay the principal. At the end of the month, it's like, oh, I don't care. I'm not going to pay the principal. Pay a little bit of interest every now and then if you feel like it. You know, and even you borrow the money off the credit card to pay your interest. That's what we're doing. Another way of putting it is that the petrodollar is the bedrock of U.S. prosperity. And I'm not saying that this is not a prosperous country and a lot of people haven't enjoyed prosperity. It is. But there, a lot of that prosperity is also a facade of prosperity, you know, because like, you know, it's easy to look rich when you're not paying your bills, okay? So there we are on that. Now for 50 years, 2074 to 2024, this year coming up, it's 50 years of petrodollars. The dollar is the world reserve currency. Dollars are ubiquitous around the world. There's massive assets, markets denominated in dollars, massive credit denominated in dollars, massive debt denominated in dollars. This national debt goes back to the year 1900. You know, World War II was a big debt. We paid it off in the 80s and 90s. It was okay. But in the last 20 years, the country has just gone crazy. I mean, fiscal spending on, you know, Iraq, Afghanistan, social spending at home, just money, 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 whatever you want. And it's bipartisan for all the people that were getting into that argument earlier about, you know, Trump, you know, Biden, blah, blah, blah. Hey, it's been going this way for a long time under lots of different administrations, okay? So the issue, if the issue was just money, the petrodollar might be okay. All right, the Saudis would say, yeah, we're mad, but you know, we'll keep using the dollar. Or OPEC will keep using the dollar for the well. But what about those security guarantees? Okay, what have we seen in the last, you know, pick a number, several years, you know, through several different administrations, but Iraq was a very unimpressive war. You know, it's like, you know, yeah, we would win here, we would win there, but we didn't win a war over there. What did we change? What did we do? Afghanistan, well, that kind of speaks for itself now, doesn't it? You know, what an advertisement for U.S. military power Afghanistan has been. I say that sarcastically for anybody out there who can't pick up on that. And then let's look at Ukraine, which is a looming U.S. disaster. Absolutely, it is just crashing and burning before our eyes. And I can hear people out there, I can almost feel the vibe. Whoa, wait a minute. Ukraine is kicking Russian butt, aren't they? We read it in the newspapers. They tell us how great it is, you know, and the answer is no, they're not, okay? No, they're not. In 22 months of war, Ukraine has lost the equivalent of 3 armies. They lost the original army that they had. They lost the second army that they raised, and they kind of re-equipped with Soviet type equipment that we cobbled together from across Europe and across the world. And then they lost the NATO trained army that they sent on that, you know, very disastrous so-called offensive last summer. And the 4th Army is dying this winter. We could talk about it all day. I mean, I have a photo there. Those are Leopard tanks and U.S. Bradleys that were just destroyed on the battlefield. Then the Russian attitude is just, yeah, sure, send them in. We'll watch them burn. The Russians have recruiting commercials in Russia, you know, where it's like, you know, hey, join the army, watch NATO tanks burn. You know, it's Russian humor there. Russia has defeated. As I told you, I spent time in it. I understand this stuff. They have defeated and wrecked everything that the U.S., NATO, Ukraine has thrown into the battlefield. Okay, Ukrainian casualties are 500,000 and more. I've seen bigger numbers than that, up to, you know, even a 7-figure number. Pretty much 90% of the ground equipment that has gone into Ukraine is destroyed. It's scrap metal. Russia is now at full military mobilization. Their economy is a wartime economy. Everything they need, manpower, ammunition, equipment, etc. They are rolling it out. They have no trouble producing all the artillery shells they need. There's an article in either today's or yesterday's Wall Street Journal about, Russia's lost all these tanks. Well, they lost a lot of tanks, but they fixed a lot of them, and then they're building them, very, very fast. I mean, we could go down the list. I don't want to bore you with, with the whole table of order and equipment, but Russia is a full military mobilized economy. They have energy, they have mines and minerals, they have metals, they have machine building, they have everything they need. Russian air power is overwhelming. I have a slide that I'll show you that in a second. Russian electronic warfare is absolutely superb. You should talk to people who understand this stuff, and they are just they speak in awe of Russian electronic warfare. Russian air defense and other missiles are basically unstoppable. Here's a recent night of Russian air and missile attacks on Ukraine. All the little blue dots are areas where either Russia bombed or Russia cruise missiled it, or whatever, they blasted Ukraine. Russian combat power can accurately and effectively hit anything, anywhere, anytime that the target guys decide. There is no what's called operational depth in Ukraine. It's not like, you can only, the first 50 miles is subject to attack, but behind 50 miles, you're safe. No, you're not safe all the way to the border of Poland. And that's only because it's the border of Poland and Russia doesn't want to bomb Poland. Any place, anywhere, anytime in Ukraine, operational depth is gone. And that's an issue in modern warfare. That is now the hallmark of 21st century warfare against a very powerful competitor like Russia, that you have no operational depth. Any place, anywhere they can hit, blow you up, okay? Now, I mention all this because the US and the idea of our military power has lost face. We've lost credibility in Ukraine. And so that brings us back to those security guarantees. Remember that we offered to Saudi Arabia 50 years ago. Now, Saudi played along for a long time. It's been a lot of fun. They went all the way through the Cold War. They went through the 90s. They were there, okay, Iraq War, yeah, whatever, Afghanistan, whatever. But lately, if you have noticed in the last 2 or 3 years or so, BRICS has become a thing. BRICS is going to become, on January 1st of 2024, BRICS is going to become BRICS OPEC. The Saudis are already selling their oil for Chinese yuan, so much for petrodollars there. The UAE, just 2 days ago or 3 days ago, whatever it is, they ditched the US dollar in their oil trade. They announced it. I could give you lots more examples, but I don't want to burn up a whole lot of time on that. So Saudi, I think, right now is hedging their security bet. You saw it last week, a week and a half ago, when Putin visited the UAE and he was hobnobbing with the Saudi leadership. And none of this, fist bump like with Obama. They were hugging each other. They were high-fiving. They were hand slapping and back slapping, and they were just having a great time. And it is perfectly, clearly, absolutely crystal clear, obvious that the Saudis are backing away from the U.S. and its U.S. security guarantees, which are the foundation of the petrodollar. Having said all of that, okay, we started with the petrodollar. I said this is the year the petrodollar, dies. What happens when Saudi and OPEC formally, in a big way, renounce the use of the petrodollar? Well, hint, the dam breaks. And all those US dollars overseas that they use in trade start to roll back to the United States. I mean, if you're an overseas person and you buy a tanker full of oil, a 1 million barrel tanker at $75 a barrel, that's $75 million worth of oil. You need a bank that has $75 million. You need insurance. You need to finance it, letters of credit. You're using all these dollars, and they're nowhere near the United States. Those dollars, they're just buying oil back and forth. But if you get away from that, if all of a sudden you stop using dollars for oil, what does that mean? Well, somebody doesn't need those $75 million anymore. What are they going to do with it? Well, I guess they'll bring it back to the U.S. and buy whatever they can with it, for as much as they can get away with. You might notice that the real estate market in the U.S. is doing really, really well. And in certain areas, if you ask the real estate agents, who's doing all the buying? Oh, it's all foreign money. What kind of foreign money? Oh, Asian money, Middle East money, European money, you name it. Those dollars are already starting to come home. And when, and I don't mean if, I mean when people really catch on, overseas people really catch on to the idea that this petrodollar has died. It's terminal, it's breathing its last, not fogging the mirror anymore. Those dollars are going to come home to the US and they're going to hit our economy like a ton of bricks, like a dam break. And it's not going to be any fun at all. Going to be inflationary. You're going to have all sorts of dislocations. The pricing structures are just going to break down. So what's the takeaway? Here we go. I don't want to get deep into the weeds of this particular stock or that particular stock. I do think gold is going up. When I said $2,500, I was just being nice. I mean, I'm just kind of getting along. It could go up a lot higher. Okay, it could. But what I really want to do here, and getting back to what Jim Altucher said at the beginning, I want you viewers out there. I want you 7,200 people watching this. I want to have it in your head that there is something wrong with the dollar. There is something wrong with the petrodollar. And there is something wrong with U.S. military power that undermines the petrodollar. And you had better be alert. You'd better be watching, sniffing for that smoke, smelling for that natural gas leak in the basement, whatever you want to analogize it to. Gold and energy are a great place to be for at least some of your money to preserve your sanity, preserve some wealth, whatever. I like Alan Knuckman's idea that you can buy calls on GDX. Okay, great. If you don't want to play that game, I like a company in Toronto called Sprott. I have no relationship to them other than that I know them, and I know Eric Sprott, and I know a bunch of people who work up there. They're not us, we're not them, but they have a couple of ETFs: a gold miner ETF and the junior gold miner ETF, SGDM and SDGJ. One is gold miners, one is junior gold miners. Sprott is very professional. They do almost nothing but deal with the mining industry. This is not some little side hobby of theirs. This is their bread and butter, is the mining industry. And they do other things. They do uranium, they do copper, they do everything else. But we've just for today, for this purposes, I love these two ETFs for the upside. And then as far as the energy index fund, again, we could pick oil companies all day. I could throw names at you and dividends. If you just want a diversified index fund, go with the Vanguard Energy Fund, and that is that's my takeaway. That's where I'm coming. I'm sorry to be depressing. I'm just trying to be. I'm giving you all the courtesy of being honest here. I'm not trying to just sweep another. The war in Ukraine is lost. It has been a disaster. All the politicians in Washington are sitting around, throwing the blanket at each other, trying to figure out, who can I blame? Oh, the Republicans didn't give us $60 billion, so Ukraine's going to lose. No, Ukraine has already lost. That $150 billion is gone. All the warehouses we emptied with our artillery shells, all the tanks we sent, all the Bradleys, all the Patriot missiles, and that's all gone. Okay, we shot it off. It got blown up. It's gone. It's history. We're gonna have to replace it. Yeah, so Raytheon's going to do well, and Lockheed's going to do. Yeah, that's a whole nother discussion. But when the Saudis and OPEC next year sort of really start to say in a serious voice, you Americans and you and your petro, it's over. It's over. It's kind of, we're walking out on it. So
hey,
that's
you can't.
the story, and I'm sticking to it.
I was going to say, you can't, if you're watching right now, you can't say you weren't warned, because that would be a huge one, right? We've been talking about this. It's been a 50-year deal. It's been a tailwind for the U.S. for 50 years. And if it comes to an end and you don't know about it, I like that analogy, Byron. I like the one of the dam, but I like the one of smelling natural gas in your house, because that one hits at home. If you smell natural gas in your house, you get out. But a lot of people, and guess what, Byron, you would know this, right? They put that smell into the natural gas. What if the smell wasn't in there and you didn't know it was happening, and all of a sudden your home blows up? That could happen to your wealth if you're not paying attention to the petrodollar. So it's big. All right, we're going to keep going here. We got 3 more big predictions. We're hitting the ground running. I want to say one thing. I'm a dad. Now, I'm not, Zach is like a billion times more of a dad than I am, because he's got 7 kids. But as the dad of the call, I want to say this. One, I'm proud of what we publish here, because the guys that are on this call, they don't have to be here, right? And when we were in Las Vegas, I saw this. James and Zach didn't have to be there shaking hands with everybody at 7:30 a.m., but they were. Jim was eating lunch with folks at lunchtime. This is a great group of people, and I'm proud of you. I also want to say, because Byron said it a couple of times, we've got 7,000 people on the call. We started almost off about 7,000. We still have 7,000 people. I want to say, if you're at home, I am proud of you for being here. I'm proud of you for putting something aside, listening to us, and I'm happy that we can deliver this at Paradigm Press because the war in the Ukraine, the petrodollar, AI combined with biotech, getting into treasuries, whatever it may be, we're talking about the ideas that the mainstream isn't talking about. And by being here today, you've got yourself a front row seat to what's happening. So coming up, we've got more giveaways. I want to get to Greg Guenthner next, Gunner. But before we do, just a little bit more housekeeping. We've got Goldbacks and the new case for gold that we want to give away right before Jim comes up with his presentation. So I think the link has been in the chat a couple different times, but we'll go ahead and throw that sweepstakes link in. We'll do that right after Gunner gives his talk. I wish I could give away Goldbacks to everyone like $500 worth, but I just did the math. It's like 3.6 million. So we can't do that. But the other thing, later in the call, we've got the whiskey bar coming up. And again, if the editors and panelists on the call, if you guys have duties and stuff after we get into the happy hour side and the cocktails and the whiskey bar, if you got to go, that's all good. We're going to do some more lightning round stuff. We've got that coming up as well. And like I said, we've got all these people on the call. We've got a special offer and a special concept that we want to unveil to everybody that only involves 221 spots available for it. So we're going to do that a little bit later in the call, but let's keep rolling. Greg Guenthner, my friend Gunner, has a very hot track record since May. He's been back at our Paradigm Press since May. He was with us many times. A lot of people might not know this, but we started about 30 days different from each other in 2005 at Agora. So we've been here almost 2 decades. Gunner is one of the best traders I know. And he has an uncanny ability to find the stocks, regardless of what the mainstream media and the narrative says out there. He's looking at the charts, looking through the markets, and finding these opportunities before the mainstream is. And he's a great trader. You could see it. He wanted to say gold there for 2024, but he went with his trader's instinct, which is normally contrarian. So Gunner, the floor is yours. What's your big prediction for 2024, and how can we trade it?
Well, it's a tough act to follow with Byron there, but I'm going to do my best. Let me share my screen because I'm going to toss a bunch of charts, obviously, since that's what I do.
Let's do it.
All right, we good?
Yep.
All right, excellent. All right. Well, first of all, to figure out how 2024 is going to unfold, I think we have to look at the major themes that have driven the markets so far this year. And one of the big unavoidable market themes that has been punching us in the face since January has been the Magnificent Seven stocks. Magnificent Seven, buzzword, it's the FANG Plus complex, whatever you want to call it. It's the mega cap tech stocks that have driven the market higher so far this year. Most of these names are obviously sharply higher, and I have NVIDIA up right here because this is the big obvious elephant in the room super trade so far of 2023. It's up a staggering 225% years to date. I mean, it's an insane rally that it's gone, and it's driven the NASDAQ 100. And you can see here, I mean, this is just an incredible chart straight up. Obviously, if you have any ounce of contrarian blood pumping through your veins, you're going to say, this can't possibly repeat that performance in 2024. This cannot possibly go up 225% next year. And in this case, I think you're correct. We could pick apart the fundamentals all day. You probably heard what Ray had to say about NVIDIA. And a little sidebar, when I see things like that, when I see the fundamental picture and the technical picture kind of coming together, that's when I know I'm kind of onto something and there could be a really big trade brewing right here. I think NVIDIA's stock is absolutely priced to perfection right now. And let me talk about the evidence that we've seen to sort of prove that this is the case. Right over here, when it topped out at $500 on the 20th of November, that was when it released earnings. And the earnings couldn't have been better. It was the numbers everybody was looking for. It beat top and bottom line, great guidance, all the good stuff. Stock went down. Perfect earnings, stock goes down. To me, that says that everybody who wants to be in this name is in it, and you're not going to impress anybody with the NVIDIA story anymore. It's all baked into the pie. It's all priced in. Priced to perfection there at 500, and it's been kind of leaking lower ever since then. I'm not saying you should go out right now and short Nvidia. I don't know if it's going to go straight down from here, but I can tell you that I don't think it's going to be the best performing stock on the market in 2024. And instead, I think we're going to get a rotation out of these names, out of these big Mag 7 names that have propped up the market so far this year. I think we're going to see smaller stocks start to do well. That is my big prediction. Small caps. Small caps are going to beat large caps in the first half of 2024, and they're going to start playing catch up in a really big way. In fact, we're already seeing this begin to take place right now. If you were watching today, after the Fed minutes came out, we saw a huge spike in the Russell 2000 small cap ETF. This thing closed higher by almost 3.5% today, while the NASDAQ and the S&P were up a little bit more than 1%. I didn't just plan this to happen today. This is what's unfolding. We are seeing a massive snapback from the Russell 2000, which has grossly underperformed large cap stocks. If we zoom out on this chart, which I'm doing right here, this is all the way back into 2022 right now. You don't need to be a market technician to see what's happening here. This is a big choppy mess.
I feel sick looking at that chart, dude.
Yeah, it's awful looking. It was breaking down to new lows just a month ago. About 5-6 weeks ago, this thing was cracking to new lows right here. And then all of a sudden it begins to rip higher in November. Everybody was sort of concentrating on tech and everything else that was ripping higher. And when the melt up rally began at the beginning of November, but this was the real big mover. And this was the one that really made a lot of sense to me. A great stat that I've been kind of keeping in my pocket that we talked about a little bit on an internal call recently is that this move right here, this fake out lower and rally at the beginning of November, that was the 24th time the Russell closed at a 52-week low and then posted its best 4-day rally in at least 3 months. That's only happened a few other times, and every other time that that's happened, it's been higher a year later, 100% of the time, with a median return of over 25%. It would not surprise me to see small cap stocks play catch up and try to get back up here to those 2021 highs that they're at right now very, very quickly, while we see something like the NASDAQ 100, which is already tagging those previous 2021 highs. I think we're going to see a big snapback move during the first half of the year, which has already started, by the way. A lot of these moves that you see that begin in the next year, they usually start percolating around November, December. Remember when all the tech growth stuff started cratering in late 2021? It was kind of a hint that like something's not right with the market. And then what happened in January? We dive into that big grinding bear market that just chewed us up for 12 straight months in 2022. I think we're seeing the opposite of something here happening in small caps. Everybody left these things for dead. Nobody wanted them. I mean, the Russell 2000, it's a very financial heavy index. We had a regional banking crisis essentially back in Q1. If you can remember back that far, it feels like eons ago, but that crushed this index pretty badly too. It could not get up off the mat. And now we're finally starting to see it come up here and outperform. And that's the main thing. We're starting to see relative strength in small caps that we haven't seen before. Another thing to keep in mind too is since we're talking about the right now and what's happening today, we had this big melt up rally post Fed today, but you look at the heat map and what was really moving. Google not even up 0.25%, Meta basically flat, Amazon up less than 1%. We have some of these Mag 7 stocks, some of these mega caps that are lagging, quietly lagging, and no one's really talking about that yet, but they're going to start to when they see these things start to level off, because what's going to happen is we're going to see some bull market rotation. Traders, investors, they're going to be looking for the next thing. What's the next thing that's going to go? I've already made money in this. Where am I going to look toward next? And I think that spot could be small caps when we're talking about very fast gains. Rotation is the lifeblood of bull markets, is what we like to say. So my recommendation is to take profits. If you were lucky enough to be in some of these names, if you were lucky enough to ride Nvidia up 225% this year, take some of that money off the table in those stocks, because I think they could be flattish or underperforming to start 2024. And instead, buy something like the Russell 2000 ETF, or even better, IWN, which is the Russell 2000 Value ETF. So we're looking at some stuff that's that maybe people haven't been digging into in the past. There's been a lot of people buying very expensive stocks in 2023. By no means have those Magnificent Seven stocks seen a value reset like a lot of the other stocks on the market. I think there's probably a lot of room for value to run. The value factor could very much outperform in the first half of the year. And it would not surprise me to see something like IWN up 20-ish% during the first 6 months and really front load those gains in the first half of the year. Like Sean said, like I think that I agree with him when he says that I think the melt up is starting, and it may be until the election before we really see any major hiccups in the market. I certainly think the melt up has already begun heading into the holidays, and there's really nothing standing in the way of this market powering higher into the first couple of weeks of January from here. So small caps, IWM, if you're just interested in a buy and hold, IWN for a buy and hold on a value factor right there. I think that's a good play. I also like gold. We were talking about gold here. If you're looking to speculate in something, I think a small gold miner could provide a nice double for you. During the first 6 months of the year, I like junior miners right now. I think that that big move that we saw, that monthly close above 2,000, I think that's very significant. The first monthly close ever above $2,000 for gold is a big deal. And I think once we kind of get out of this over exuberance and reset that we've seen over the past couple of weeks, it's really going to fly higher, and a lot of these stocks are going to catch. One of my favorite charts on the smaller gold miners right now that I'll throw your way is KGC. One of the reasons that I like it is because you can see here, even with some of the craziness we've seen this week, it really didn't reset that hard. And it's already pushing back above those early December highs when gold was flirting with 2,100 just a couple weeks ago. Really nice chart. And again, this is one of those things where maybe not necessarily the best business in the world, but these smaller mining stocks, they can easily double in a short amount of time. I wouldn't be surprised to see this thing at $10 in short order.
All right.
Love it.
All right. Gunnar, I'm going to stop your share. There we go. And I'm going to go back here. Now, look, it's not technically the right time, but Gunnar, you've got the dogfish head sign behind you. And the saying is it's 5 o'clock somewhere. And that somewhere is the East Coast right now. So I'm not going to open up the whiskey bar, but let's just say if you've got a drink, you might as well pop it open at this point. Doug's looking like we should probably do it. Here's what we got. 2 things real quick, and then I'm going to turn it over to Doug, and we're going to get to Jim Rickards. Jim's been on the call with us for an hour here, and we got a lot of people that want to hear what he's got to say. And then right after that, we've got James. I want to go ahead and announce the winners. What we did is we've got the new case for gold, Jim's book, and then we're just adding, because we're excited tonight, we're adding $200 of those gold backs to this. So the 5 winners will get a signed copy, I believe, of Jim's book, and then $200 in gold backs. So let's go ahead. If the moderator can put those names into the chat, we'll go ahead and do that, and I'll announce them real quick. It looks like we've got George F. from Waynesville. We've got Doug Brown from Fredericksburg, Norm Whiting from Mesa. So we'll get you guys, and I think we've got 2 more coming. So we'll do that. And then real quick, we, over the last couple of days at Paradigm Press, weeks actually, we were sending out, we wanted to hear your predictions at home. So I wanted to make sure I did this. We have a poll. So again, I'm going to open up the poll line. So everyone get ready. Some of you got left out last time. We've got 5 or 6 predictions from our readers for 2024. So I'm going to go ahead. I'm going to open this up. I will read them out loud to you. Says, which prediction do you like the most? Oh, let me see. Hold on. I'm going to end this for a second. I got to read some of these out loud real quick.
If I could see them, Matt, if you want me to read them.
Okay.
Yeah, if you want to put that up, and then everyone can see it if you're not able to see it for some
reason.
All
right, let's do it.
All right, so we've got 5 predictions here. The first one is we will see a significant bear market for the first 9 months, followed by a strong bull market in the last quarter of the year. That's John H., and that's prediction number 1. Prediction number 2 is gold will go to $3,200. That's from Murray F. Number 3 is in 2024, there will be a major breakthrough in quantum computer technology, specifically in the realm of qubits stability and error correction, speeding the development in future years. That's from Douglas F. Number 4 is Biden either steps down or dies in office. Then Harris is sworn in, and China, feeling America is at a weak point, invades Taiwan. That is Edmund. Number 5, President Trump will retake the White House and then announce a return to a gold standard, probably in combination with a basket of other commodities such as oil, silver, and copper. That's from Edward. And because I can't count, here's our 6th one. The war in Israel will escalate to involve other Middle Eastern countries with blockages of oil shipments, resulting in spiking prices for crude. That's from Terry P.
All right.
We're not allowed to vote, which I think is a travesty on epic proportions.
I
However,
thought I allowed you guys. I guess I did something wrong, most likely.
Yeah.
All right, we'll let another minute go by. These are some pretty long ones, but you can see it's a significant bear market. Gold will go to 3,200. There'll be a major breakthrough in quantum computing. Biden steps down. Trump will retake the White House, or war with Israel will escalate. All right, here we go. We're ending the poll. We're sharing the results. Big winner there, and it was the 6th prediction, and that's that the war in Israel will escalate.
Ooh, that's a good
So
one.
we didn't say this, but I forget who wrote in that prediction. We've got something special for you. We know your email address because you wrote it in the last week or two. We'll be reaching out. We got a free sort of paradigm gift bag for you. So, Doug, I'll let you take it from here. Thank you for reading those. I was only able to see the first sentence of them. So,
Yeah, no problem. That last one was Terry. I didn't get the last initial, but Terry, if you,
All right.
that was
Terry P.
Terry
Yep.
P. Thank you, Jim.
So anyone that won anything, we have your email addresses. We're going to be reaching out, someone from our team, most likely, it might be Emily, reaching out from our team just to make sure we get your address correct, and we'll ship this stuff out.
Okay, and it's 5 o'clock here, and if you guys are going to get a drink, we certainly welcome that. I'm going to be breaking out my eggnog. Jim, I don't know if you're going to do a Vesper Martini again this year, but we could talk about that maybe after your predictions here. And so during our happy hour, we're going to be taking Q&A from everybody as well. So we're monitoring the chat. We're going to be pulling out questions from everybody. So stick around for that, because that's a fun part. That's our whiskey panel, fun part of the event as well. So if you're on this call, you likely know Jim. You know his face. You've seen him all over the internet. You subscribe to his newsletters. He is very much one of the most famous macroeconomic minds in the world today. He's advised the Pentagon and the CIA, and he also correctly predicted the 2008 financial crisis. And the reason he was late today is because he was monitoring Jerome Powell's statements after the Fed's decision today on rates. So we have a 2-parter for you with Jim. The first part, Jim, as we discussed prior to the call, you could tell us anything that you found, you learned from Powell's comments. That would be fantastic. And then when you're done with that, we'll roll into your 2024 prediction. So we're all looking forward to it, and you now have the floor, sir.
Great. Thank you, Doug. And I'm sorry I missed the first hour or so of the presentation, but I did get a dispensation from our leading authority because it was contemporaneous with the Fed announcement. The announcement itself was just a 1-page press release and not really a surprise, but the real action is in Jay Powell's press conference, where he had some tough questions, and he's got to field those, and you're always looking for the nuance or things that he said that tell you more than just the announcement. So as far as the announcement is concerned, no surprise. In fact, we sent a bulletin to our readers of Crisis Trader yesterday saying the Fed would do nothing, and they lived up to the expectation. They did nothing. There's no policy change. There was another pause, if you want to think of it that way. But beyond that, I have actually I have to write another report tonight to distribute tomorrow on what happened. So I have my notes for that if I can refer to those. And most of these are quotes. I'll indicate when they're quotes, but most of them are direct quotes from Jay Powell. He said, inflation has eased from its highs. That's true. Without a significant increase in unemployment. Again, that is true. Unemployment remains low, up a little bit, but not really very much. But, of course, the Fed likes to have it both ways. So inflation is eased. That sounds like a good thing. It is. But he says inflation is still too high. Then says the full effects of tightening have not been felt. What that means is they've been tightening since March 2022. Even with the pauses, or what I call the skips, they skipped in June, September, November, and now again in December. They did raise rates in July. There was one exception. that they're, but it's important to remember they're still doing QT, quantitative tightening. They're still reducing the balance sheet. So, which is just a different form of tightening. It's not a rate increase, but it does take money out of the system. Everyone says, "Oh, the Fed's printing money." They're actually not printing money. They're burning money. They're eliminating money, which is what happens when you let bonds mature and you don't buy new ones. The money just disappears. It's the opposite of money printing. So the Fed's still tightening in the form of QT, but they do feel they're at what's called the terminal rate. The terminal rate is are rates high enough that it will bring inflation down on its own without further rate hikes. So you'll get the benefit of reduced inflation without doing anything because you've already raised them enough, and that has to do with the lag in monetary policy. The things you did 6 months ago are just sort of showing up in the economy today, and that's what's happening. So they didn't put a stake in the ground and say they're not going to raise rates again. They left that on the table, but just barely. There's no question that Powell's comments on balance were dovish. You see a lot of people, a lot of the commentators were saying, well, here's the pivot. Well, it depends on your definition of pivot. Wall Street's been wrong about the pivot for 2 years. They keep saying rate cuts. They haven't happened. They're not going to happen until the middle of 2024 at the earliest. So there's been no actual pivot in terms of a rate cut. But if you want to say, well, instead of leaning towards tightening, they're leaning towards easing without doing anything, that would be an accurate statement. They have, it was on balance dovish, but as I say, it's like moving the goalposts. If you change the definition of pivot, I guess you could say you had one, but it really was one. Of course, they didn't cut rates, so they're not going to do so quickly. The usual hedged remarks. We still need to see further evidence that inflation is moving steadily towards our goals. But then the obligatory keep your options open. Jay Powell said, quote, "We are prepared to tighten policy further if appropriate." That's a big if. We're not seeing the kind of inflation and high growth, lower unemployment that they would need to tighten. But he left it on the table. And then, of course, this was one of the meetings when they had the famous dots. The dots are a dot plot called a statement of economic projections, where the governors and the Federal Reserve Bank presidents all put in their forecast for unemployment, interest rates, economic growth, and a few other variables. And there was a definite tilt towards rate cuts in 2024. I wouldn't expect them until the middle of the year, but they're on the table. Powell said, "We are likely at or near the peak rate for this cycle." So that's as close as you can get to saying we're at the terminal rate without actually taking potential rate hikes off the table. And he says we still have a ways to go. No one's declaring victory. That would be premature. Sounds right. There's little basis for thinking the economy is in a recession now. My own view, I disagree with that completely. There's a very good chance we are in a recession right now, but the Fed has never forecast a recession, other than saying, yeah, they happen. Okay, they could happen. Yeah, sure. But does the Fed ever say our forecast is for a recession? No, they never do that. They're never right about it. Recessions come and they react to it. They don't get the idea that the Fed leads the economy. The Fed follows the economy. This is just one more example. He did make a very interesting point. It's a little more subtle. He said we have to think about the impact of higher real rates if inflation falls faster than rate cuts, if any. So I just said the Fed's not likely to cut rates until the middle of 2024. That's right. But if inflation is falling faster than interest rates, if interest rates are stuck or come down slowly, but inflation falls faster, the real rate goes up. The real rate is the spread. It's the nominal rate minus inflation. So if inflation is falling, even if rates are constant, the real rate's going up. So that's a form of tightening. It's not very well understood, but Powell at least acknowledged that they have to look at that. And again, they're probably going to chase inflation down. As inflation goes down, they'll have to cut rates to avoid real rates going up, which is another thing that could slow the economy. It just shows how convoluted the Fed policy can actually get. He did say rate hike is not the base case anymore, as it was several months ago. That's a very dovish statement. He also said wages are running higher than what would be consistent with our policy goal. Well, you think higher wages would be a good thing, but of course, inflation can flip from the supply side, which it has been, to the demand side, which is we're starting to see that with the UAW strike. Pilots are getting big raises. Auto workers are getting raises. Teachers are getting raises. We're seeing other labor actions elsewhere throughout the economy. If you get all those nominal wage increases, that can feed inflation in and of itself. And then he did make a reference to the fact that, in my view, based on data, it looks like the consumer hit the brakes in October. We had very good growth in the second and third quarters, but it was very much driven by consumption. But consumers at this point have run down their savings, charged up their credit cards. No more grace periods on student loans, no more handouts, no more pandemic cash. A lot of the fiscal stimulus is over, and savings are used up. Credit cards are maxed out, and so the consumer, as I say, just slammed on the brakes. Powell made reference to that. His exact quote was, "Maybe people bought so much stuff they don't need as much stuff." Okay, it sounds a little bit like Chauncey Gardner, but that's what he said. He made another very interesting comment. He said, the Fed will ease, meaning cut rates, of course, before inflation gets to 2%. Now, it was 2% is the goal, but if inflation drops to, let's say, 2.5%, or even 2 3/4, the Fed might cut then rather than waiting for 2% so they don't overshoot. In other words, if you wait to 2% before you cut rates, you might end up at 1.5 or 1, or even deflation, which is a completely separate problem. So Powell is showing a little finesse here, but don't be surprised if they cut interest rates well before they get to the 2% target. And then just to show that they like it both ways, you said we're not talking about altering the pace of QT right now, meaning they're going to continue to to tighten monetary policy in the form of quantitative tightening. There's no anticipated change in that. So what happened in the markets? Well, I think, again, a lot of it, our viewers probably know, stocks are up, bonds are up. The yield, by the way, the yield to maturity in the 10-year Treasury note, it's been dropping like a stone since November 1st. But what happened today? It was 8 basis points. It went from it opened the day around 4.1 and change. Ended up at well, I got the ticker right here. I'll give you an exact number. Where is it? Yeah, 4.025. So, but to go from 4.1 to 4.025, that's an earthquake in bond space. It doesn't sound like very much, but bond prices go up when interest rates come down. That's bond math 101. But what a lot of people don't realize is that the amount of the price increase, what's called the DV01, dollar value of 1 basis point of rate cuts or rate reductions, translated into capital gains, basically higher bond prices, that goes up at lower levels of interest rates. So interest rates going from, let's say, 8% to 7%, 1 point cut, okay, you get a capital gain on the bond. But interest rates go from 5% to 4%. You'll get a much bigger capital gain. In both examples, it's a 1 percentage point rate cut in both examples, but the capital gain on the Treasury is much greater at lower absolute levels of interest rates. I don't want to get too in the weeds, has to do with duration and other factors, but it really reinforces Zach's recommendation for TLT or 10-year Treasury notes. Season to taste. If you still too volatile, maybe like the 5-year. I like the 10-year personally, but if interest rates go, now they're 4%, just slightly above, to 3% or 2.5%, where they were there not all that long ago. And that's consistent with the recession, by the way. You got huge capital gains on your 10-year Treasury notes. So I like that a lot, and I like Zach's recommendation in that sense. So gold had a big day. Went forget the exact opening level. It was around 1980, 1985, somewhere in there. Again, I'll check the ticker. It soared today. It was up over 2%. Yeah, gold is 2043. So you go from 1990 to 2043 in one day. That's well over a 2% gain. Obviously a function of interest rates. Interest rates come down. Bonds compete with gold for investor dollars at high rates. People say, give me the bonds. At lower rates, you get nice capital gains, but gold looks relatively more attractive. Of course, gold has no yield, so if it has to compete with instruments that do have a yield, those lower rates, which we're seeing, make gold look relatively better. And that was part of what fueled that big increase in gold prices. So it's kind of everybody went today. Bonds up, stocks up, gold up, take your pick. It was people call it the everything rally. But I wouldn't be doing my job if I didn't introduce some really negative aspects to this. Everyone's excited about the fact that inflation is coming down, and that's a good thing. I'm not saying it isn't, but nobody asks why. Because stocks are up, bonds are up. I mentioned inflation is coming down. Geez, they call this the Goldilocks scenario, the soft landing. Here's the deal: there's no such thing as a soft landing. That's one of these Wall Street narratives. They make it up. They give it a name to sell your stocks and kind of keep things pumped up. There is no such thing as a soft landing. If we're coming down, it's going to be a hard landing. It's going to be a crash. It's going to be a very serious recession. So while people like inflation is coming down, there's no question about it. But you have to ask yourself why. Well, the reason it's coming down is because the economy is slowing. The consumer is checked out. Stocks are, in bubble territory to a great extent. We're looking at a very significant recession, a severe recession. We may already be in it. We never know until after the fact. The data lags, and forget about the National Bureau of Economic Research. They'll tell us in 2025 that the recession began in late 2023. Thank you very much. I think we'll know long before then. But the point being, you can't just say that inflation coming down is a good thing unless you ask why. And the reason why is we're heading into a recession, and that will continue the bond rally for sure. And gold will be attractive as a safe haven, but I wouldn't be so optimistic about stocks as a whole. There are sectors that will do well, no doubt about that. I think Ray did a great job of pointing out some of them, but the stock market as a whole will go down in a recession. There's just no two ways about that. So that's kind of a quick summary of the Fed action. Now to part 2, season 1, episode 2. I'm going to do my prediction. I'll remove the. Sorry, Matt. Should I jump in here or keep going?
I was just going to say. So more fuel on the fire. The market got what it wanted out of the Fed today, but you have a not so fast. It could be not such a great thing for 2024. So. Yeah, I was just going to make one comment about something I saw in the chat, and this goes to everybody. Robert said, this whole Zoom presentation is over the top outstanding, and I couldn't agree more. This has been fantastic. Really appreciate everyone's thoughts and the insights, and the amount of effort it takes to put these predictions together is fantastic. So very much appreciate that. So, all right, Jim, sorry to interrupt, but I thought that was important for everyone here to know the feedback. But so what is your prediction for 2024?
Well, I've got two predictions, but I want to kind of broaden it a little bit. My recommendation is I have two stocks: Chevron, New York Stock Exchange, ticker CVX, and ExxonMobil, New York Stock Exchange, ticker XOM. And when you say, okay, I'm recommending energy companies, people go, well, that must mean oil prices are going to go up a lot because, it's good for energy stocks. And I just gave a recession deflation scenario. So how do you kind of reconcile those two things? I just want to spend a couple of minutes on energy prices in general and why I like those two stocks, whether oil prices go up or down. And again, I'll explain why. Energy market is extremely difficult to analyze, but one of the reasons for that is because there's a huge market manipulation political component to it. So there's a long list of factors we would look at. Obviously we look at supply and demand, broadly speaking, geopolitical factors, including relations between U.S. and Iran, U.S. and Saudi Arabia, other key linkages, which Byron mentioned between Saudi Arabia and China. You got to look at interest rates, exchange rates, pumping logistics, transportation logistics, new oil discoveries, refinery capacity, new technology, and of course, fracking revolution is old news at this point, but that's an example of how technology really can revolutionize the industry. And these factors have to be put in the context of geopolitical unrest, including the war in Ukraine, the war between Hamas and Israel, the chances of escalation in both of those wars to the point of the use of nuclear weapons, and the financial sanctions, which have been wrapped around Russia and the rest of the world as a result of that. And I'm not a meteorologist, but I always say don't forget the weather. The Russians have a name for weather. They call it General Winter. General Winter is one of their commanding officers, and the Russians know how to fight in winter, and most armies don't. So that gives them an advantage. Last year, Europe skated through what could have been an energy disaster because it was a fairly mild winter, and they took some steps to increase their natural gas imports. And by the way, Europe is still buying enormous amounts of natural gas from Russia, as much as any. Russia's hard currency revenues from energy sales, oil and natural gas, are at all-time highs. So don't believe what you read in the New York Times. They're not starving. They're not shut out of the markets. The boycotts don't work. The sanctions don't work. And they're still selling plenty of energy to Europe. And by the way, the pipelines go through Ukraine. It's like, the Russians are paying Ukrainians usage fees to run the pipelines, and Europeans are paying the Russians for the energy in the middle of a war between Russia and Ukraine. So I guess we're financing both sides, but nothing particularly unusual about that. But my bigger point is, every factor I just mentioned, I'm not going to repeat them all, but interest rates, exchange rates, wars, geopolitical, et cetera, they can apply to any analysis. They could apply to any stock or any commodity. So what is it that is really special about the energy market? I mentioned at the beginning, it's the big three. It's the United States, Russia, and Saudi Arabia. Those three countries produce a little over 30% of the total oil supply in the world. They dictate the prices. There's no question about it. Not just Saudi Arabia, by the way. The U.S. and Russia are a very big part of that. So it's market manipulation by sovereign states that sets oil apart from almost any other market. Oil is the blood in your system. You simply can't do without it. If we have a copper shortage, okay, the price goes up, construction slows down, mining output maybe increases, you do something about it, but you muddle through. It's not the end of the world. With energy, it's different. When shortages develop, the lights go out, heating systems fail, air conditioning goes off, the power grid can collapse, transformers explode, and military capacity can be highly degraded. People die. That's what happens when there's an energy shortage. So it's really up to the big three to make sure that doesn't happen. My point being, energy is too important to be left to markets. Of course, markets play a role, but the geopolitics of those three countries deciding what's in their best interest. Now, right now, we have a very good example of that, which is Saudi Arabia has reduced output and encouraged others to do likewise to prop up the price. Why are they doing that? Well, they've got goals. They want oil to be around $75 a barrel. They might love it to be higher, but they need it to be $75 a barrel because that's how much revenue they need based on output just to meet their budget. I mean, they got a lot of mouths to feed, as the saying goes. The fundamental case for oil prices is weak. So I'll come back to the geopolitics, but the fundamental case, with WTI futures on the NYMEX hit 93.68 per barrel on September 27th, just a few months ago. There it dropped to 82.31 on October 5th, 12% drop in 1 week. A little bit of a rebound on the massacre of Jews on October 7th, but that once it appeared that it was a war between Israel and Hamas, but the fear of escalation dialed down a little bit, so the decline in oil prices continue, and we were at 69.50 a barrel today. That's a peak to trough drop of 26% from the late September high. That's the trend, and it's consistent with everything else I just said, which is that inflation is coming down, not for good reasons. Inflation is coming down because we're heading into a recession. When you get into a recession, you should expect commodity prices to drop and oil prices to drop with them. The recession signs are real. They're growing worse. Credit contraction, rising bad debt, increasing jobless claims, collapsing commercial real estate markets, contracting world trade, inverted yield curves, and a number of other technical indicators. In fact, as I mentioned, the recession may already be here. Interest rates typically peak after a recession begins. A lot of people don't get that, but this goes, take your time series back as far as you like. So when you get into a recession, don't interest rates come down? In the end, they do, but at the beginning, they go up because revenues are drying up, margins are contracting, companies need working capital, So they actually borrow, use up their lines of credit, et cetera. That tends to increase interest rates when the recession has already begun. But then within a month or two of the recession, as things get worse, yes, then interest rates come down because bad debts stack up, banks tighten their lending standards, et cetera. So the fact that interest rates have already peaked, kind of November 1st was the peak in the yield to maturity on the 10-year Treasury note, which is a good proxy. Everyone looks at LIBOR, or overnight rates, repo rates, SOFR, which et cetera. That's important for leveraged investors, for hedge funds, even for banks if you're financing things in an overnight market. But if you're doing, if you're getting a mortgage, if you're doing construction, if you're doing a long-term fixed asset investment, the 10-year note is a much better proxy. Those are 5 to 10-year horizons, and that's how you have to think about financing them in the bond market. So that peaked on around November 1st, and it's been coming down, which tells me that the recession has already started, consistent with the consumer hitting the brakes in October. So if that's a lot of data. But if that were all we had, you just say, hey, oil prices are coming down. Could be down to $45 a barrel. That would not be a big surprise under those conditions. But this is where the market manipulation comes into play. I mentioned Saudi Arabia wants higher oil prices. The U.S. wants higher oil prices for completely different reasons. We have the Green News scam running 24/7. Biden depleted the Strategic Petroleum Reserve. So now they're going to fill it up at higher prices. It's typical Biden policy. But the point is, the Greenies, Jennifer Granholm, Secretary of Energy, Biden, and the rest, they want higher energy prices. Sorry, they want higher oil and gas prices because they're trying to cram, electric vehicles down everyone's throat. They're non-economic. By the way, the peak in electric vehicles was 1910. They were pretty popular between 1900 and 1910. They were invented in 1837. The only ones using them in the 1950s were the East German Postal Service. They had a fleet of electronic vehicles. There's a reason why the electronic vehicle was obsolete in 1910. Batteries. Guess what? Hasn't changed. Yeah, batteries are a little more efficient, but you got to pull over this 300-mile stuff. Forget it. I mean, and people forget that in the winter, I have a 6-cylinder, 24-valve, 350 horsepower engine. But when I want heat in my car, it's free because the engine's hot. So they just blow the hot air into the cabin and I stay warm. If you want heat in an electric vehicle in a Tesla, guess where it comes from? It comes from the battery. So so that's how they run the heater. So you're using your battery up faster. You can't even go as far. They got all kinds of problems. But like I say, it's an obsolete technology, except for golf carts. So I'll grant that electric golf cart is a good way to do it. But the government's pushing them as a matter of policy, ideology, really. And so they need higher oil prices to make the really lousy alternative look better by comparison. So the U.S. has got an extra grind. Of course, Russia wants higher oil prices because they're fighting a war. So the big three all have their own reasons for pushing prices higher. What could make oil prices a lot higher? Well, a Houthi missile that hits an oil tanker in the kind of around the Gulf of Aden or the Red Sea. The war in Israel, Gaza escalates to the point where you got to take out the Iranian Navy, which Ronald Reagan did, by the way. That's not a stretch. He actually did sink a lot of Iranian Navy vessels. Iran retaliating by closing the Straits of Hormuz. Hezbollah escalation. They're a closer Iranian proxy than Hamas. Hamas is on the payroll, but Hezbollah is the real Shiite end of the Shiite crescent, as they call it. They've been ratcheting up their activities. And the Houthis, of course, Biden took them off the terrorist watch list. Nice going, Joe. They're the ones firing drones at Israel and trying to hit tankers and commercial shipping in the Red Sea. So that escalation potential is there. So just to kind of summarize, the lower price factors kind of come down to one thing, which is recession. I could give you 20 reasons why we're in a recession, but that says it all. The higher price factors, Russia, US, and Saudi all have their own reasons for higher prices. We could be in for a really bitter cold winter. I think the weather might work in favor of higher energy prices this year, financial sanctions, and the Green News scam. So then getting back to Chevron and ExxonMobil, it's like, well, okay, Jim, which is it, higher oil prices or lower oil prices? I just painted two scenarios where the likely outcome is much lower oil prices. but you cannot discard the potential for much higher oil prices based on one or more of those factors coming into play. So don't you have to pick one or the other to recommend the energy stocks, Chevron and ExxonMobil? The answer is no, because they do well in both states of the world. They're big companies. They've got a lot of planning. They've got a lot of capital expenditures. They've got a lot of levers they can pull. The easy one is higher energy prices. Yeah, that will absolutely benefit. By the way, just before I finish, I should disclose I do own a small position in Chevron. And so just put that on the table. I will not sell it without notifying all our readers. I have no intention of selling at the moment, but if that changes and I decide to sell it, I won't sell it before we notify our readers. So everyone will have a heads up on that if and when the time comes. But that said, yeah, higher oil prices clearly benefit Chevron and ExxonMobil, but lower oil prices can benefit them as well, because you can't look at any one factor in isolation. A world of disinflation, a world of recession where energy prices are coming down, guess what else is coming down? Their costs. So interest rates that they pay, labor costs, transportation costs, et cetera. So the margins can actually expand. And that's how you judge a stock, basically, their margins and on profitability. In addition to that, Chevron and ExxonMobil have both announced major acquisitions in the past 6 months. They haven't closed yet. They're in the process of closing, but there are huge economies of scale that are going to come out of that have not been fully factored into the stock price. So in a world of recession and lower oil prices, you're going to have lower cost economies of scale. The stocks will do well. In a world of higher oil prices, notwithstanding the wheels coming off the rest of the economy, they'll do even better. So I like them in both states of the world.
Awesome. Jim, I like it. And I like that a lot of you guys are lining up with some of the similar themes here, because it makes it a little bit easier for me as a reader and a viewer of this. But it seems like we've got a lot of things happening. I mean, whether it's geopolitical and some bad things to come, or if it's market-based and we're looking at charts, there seems like there's a lot of, I guess, tailwind for, looks like gold, looks like energy. All right. We're running here. We've still got one big prediction. We've got our whiskey bar panel coming up. We appreciate if you're here. I saw in the comments a few people were wondering, is there going to be a transcript? Do we have a replay? Some people said, oh, if someone has to go, that kind of stuff. So I did want to do a couple things. I want to let you guys know some housekeeping stuff. And one was about, like I said on the call, a call earlier, we've got, I want to say something like 7,000 people at the high water mark. We're still right around that mark right now. And what I wanted to say is, for anyone that's here, we appreciate you being here. I wanted to make sure you had a URL. So I'm going to ask the moderator to see if they can drop it into the chat in a second. One of the comments that I had was, it's great to see you guys all together. We should do this more. That's actually what we do at Paradigm Press every day. We get to listen to these guys. We get to hear their predictions. We get to see their recommendations. And that's why I wanted to make sure I get that link out there. The link is just 221spots.com. So if you're on YouTube, you can just type it in, or if you're here, you can click that link that's over in the chat. And what that is our Paradigm Press Omega Wealth Circle offer. It's a master key to everything that we publish. And there's a special deal. We haven't had this thing open, I think, for almost 2 years. So we're reopening it today. This is big, big news. And it's a way that you can get access to everyone. So I wanted to make sure everybody has that information. Everybody can see it, and everybody's got that link, because if you have to leave, at least have that link. You should not leave, because we've got James Altucher coming up. And then we've got the whiskey bar going on, where we want to do some more lightning round questions. We've got another reader poll for all the viewers out there. But go ahead, click that link, so at least you've got it up. You can see everything there with that master key deal. And that's the key. I mean, having the research here, the geopolitical, the charts, the contrarian ideas, or just seeing, hey, all four of these guys or this thing and that thing, it's all lining up. It's going the same way. Very important stuff to have. And I wanted to make sure you had that link. Doug, am I missing anything there, or we want to keep rolling?
Yeah, no, I'm going to add some color here, because, Matt, you and I are kind of spoiled as publishers here and working with the guys on a daily basis.
Yeah.
I get to travel as part of my job. I get to travel with Ray and James and Byron and Jim. We've all done trips together this year. We get to do phone calls. I mean, I do probably 4 or 5 phone calls a month with each of these guys to talk about what their takes are on the market. And, among all the services, there are probably 23 or 24 newsletters that we publish here every single week, every single day. And we get access to all of them, right? And that experience gives us a well-rounded view of what's coming up in the markets, the risks and the opportunities. And so if you add up all the prices for those particular services, it's substantial amount of money. So we're figuring out, well, how do we do this in an economical way that makes sense for you as readers primarily and us as a business? And the Omega Wealth Circle is it. That's the way to do it because it puts everything on the table for you. It's a really a fantastic opportunity. I recommend it to anyone. I talk to people at these conferences and things of that nature, and it's the way to go. So I just, it's the, what do we call it? The pass key? I think it's
like the master key. And again, I see some comments coming in. We've got the comments just coming to the panelists right now. But some people are in there. I've already got Omega Wealth Circle. That's great. Hopefully you're out in Vegas with us. Hopefully you have access to everything these guys do. But if you don't, we've got a special offer for you. Go to 221spots.com and you can find it there. All right, Doug, let's keep it rolling.
All right. So I saw a couple of people saying, hey, where's James? I want to hear James speak. And there's a good reason for that. James has a fantastic track record of finding early tech opportunities and making recommendations that work for people. He's the crypto millionaire that went on CNBC and sold his book, Choose Yourself. This is back in
2013.
Yeah,
2013. And he sold Choose Yourself on a website that only accepted Bitcoin. So if you wanted to buy his book, the only way to do it was to transact in Bitcoin, a tenth of a Bitcoin. And I think at the time, Bitcoin was around $300. Don't quote me on
it was about $100, and I sold 61 copies for a tenth of a Bitcoin.
Yeah, so you get 6 Bitcoin for selling your book, which is probably if you held
240 grand. It's a lot of money.
A lot of money.
People would it was a PDF that I sent. So 1/10 of a Bitcoin now is like $4,000.
Yeah,
for a PDF. I mean, look, it was only, nobody knew it was only $114, but on CNBC they were laughing at me. They said, "Did you just do this for marketing purposes?" And I replied, "Well, I'm on national TV right now, so I guess it worked."
Yeah, I guess it did, James. Well, today, James is going to talk about something else. James has shifted his sights somewhat to AI. And there's one industry that James has been talking about over the last couple of days that is ready-made for the big data and computing power that AI can handle. So, James, why don't you go ahead and lay out your prediction for everyone, and we'll wrap this up.
Yeah, sure. So first off, thanks for all the presenters who came before me, like such great jobs. I took notes. It was very interesting. I want to address it a little bit. And also thanks for everyone listening to me. This is the one meeting this week I have not canceled. I have a really bad case of COVID. It probably would have been much worse if I had gotten vaccinated, but fortunately I didn't. So I already feel like I'm getting a little better, which made it a little easier to come to this.
We're live on YouTube. They're probably just going to censor us now. The whole thing's done.
Like that.
All right, I'll get vaccinated.
Well, no, we're glad you're here.
So I want to really great macro stuff from Byron and Jim and great stuff from everybody. But I want to address the petrodollar thing that Byron brought up. In April 2020, I was talking on my podcast with Jim McKelvey, who's not only the founder of Square, but also a deputy Fed governor for the St. Louis Fed. And I asked him, do you think you could just keep printing money like trillions of dollars? This was in April 2020. Do you think you can just keep doing this forever? And he said, yeah, the thing we're really worried about right now is deflation. Because of the petrodollar, there is so much demand for the US dollar because every country needs US dollars that we can't get things inflated. Well, obviously, they overshot considerably and on every angle of this. And because the Fed is worried about they overshot too much. That's why Jerome Powell even says, it's very unusual for him to say, expect rate cuts coming soon. And as Jim pointed out, the market was having a party today when Powell said this. But there's a very important thing, as Jim was saying, to point out about inflation. Why does inflation occur? Why does inflation go down? In other words, why does inflation go down? Because people stop buying things, so prices go down. What happens when people stop buying things? We get a recession. And as Jim mentioned, we probably already are in a recession. I want to correct one thing. The stock market doesn't go down on average during a recession. There's been 11 recessions in the US since World War II. On average, during the period of the recession itself, the stock market returns 0%. So, meaning sometimes it goes up, sometimes it goes down, but on average, the return has been 0% during a recession. So, this means that sessions like you're attending right now are very important because you can't just sort of go all in on the market, or you can't just stay out of the market and ignore things. This is what's called a stock picker's market in every sense of the word. There will be stocks that go up considerably, and there will be stocks that collapse, particularly during a recession. One thing for sure in a recession is that we'll see volatility. So the other thing I want to point out about the time we're in is that I've given a lot of talks over the past year, and I've gone to entrepreneur conferences, tech conferences. I've spoken around the world. And one thing I've noticed is that people are and this is very different from other recessions that I've seen and that we've all lived through. People are very enthusiastic about new innovations that are happening right now. So genomics, but particularly AI. Every conference I go to, everyone's talking about AI. And don't get me wrong, there is going to be a recession. Again, Powell sees it. That's why he's already talking about rate cuts. That's why the market went up today. There's going to be a recession. Who knows if it's going to be a bad one or a good one? Recessions in general are never really that good for people. It means a lot of people are losing jobs and a lot of people are in an economic pain. But it is what it is. But I've never seen it before a recession starts, this much enthusiasm about new technologies. And AI is the first technology I've ever seen where the hype equals the reality. So there's so much hype about AI. Like Greg was mentioning, NVIDIA's up 250% this year. By the way, Greg, I could tell you're a trader at heart because traders pronounce NVIDIA and NVIDIA is pronounced NVIDIA. But since traders just trade, they don't have to like hear about the company. They always pronounce companies wrong.
Yeah.
So when I was just day trading, I was always trading NVIDIA. I didn't know until years later when I was actually interested in companies that it was NVIDIA. But that's a compliment saying you're focused on trading. But I also want to say about the nature of predictions. I do think 2024 is going to be the most unpredictable year probably I've ever seen in my career. Like if you watch movies about, potentials for, this is a World War III movie, it always starts off with scenarios like we're seeing now, like insane presidents and terrorism and in the Middle East and war in Israel. Like exactly what's happening now could be the beginning of a movie about World War III. So I do think what we are going to see, that the most obvious things that will happen are probably not going to happen. For instance, I don't think Donald Trump's going to be the Republican nominee. I don't think Joe Biden's going to be the Democratic nominee. I think 2024 is going to be a year of surprise. 2023 has already had a lot of surprises, and 2024 is going to be even more surprises, although recession's pretty predictable right now. But, again, one thing we've seen in 2023 and early 2022 that has excited me and will continue to grow is AI. But another area that's more dangerous, we also started to see increase a lot in 2023, and it's going to increase even more in 2024, particularly with the geopolitical uncertainty. And that is, I'll describe it with an example. So on November 25th, software hackers, apparently coming from Iran, literally took over in the software, the municipal water authority of a city right next to Pittsburgh. And the whole water utility had to be shut down and run manually because Iran was controlling it. And this is not an unusual thing. If you even like, I'm assuming, even if you Google news in the past 24 hours, Chinese and Russian hackers have tried to take over various utilities, electric grids, and so on. This is happening every single day, and it's getting worse and worse. There was over 300 ransomware, successful ransomware hacks on public companies in 2023, and it's only getting worse. Like, I don't know if you remember, right before all of us were in Las Vegas, actually, 2 casinos were hacked. You couldn't use your key card to get in your room. The elevator stopped working. And I forget which one it was. I think the MGM paid 17 million ransomware to get the hacking to stop. And Caesars, I don't think paid anything. I don't know what happened to them. But this is even more dangerous with AI. I was recently visiting a cybersecurity company, a private company that I'm personally invested in, and I was asking them, "What's your biggest challenge?" And they're all PhDs. They're all like brilliant programmers. Their top guy told me, our biggest concern is that the bad guys are better than us, because they have nothing holding them back. There's no ethics holding them back. They're usually with very bad actors like, Russia, China, Iran, North Korea. So it's all systems go for them. They could do whatever they want. They could try whatever they want. And it's very hard to fight them because defense is harder than offense. And now with AI has the ability to look at large, complex systems and guess faster than humans where the security flaws could potentially be. So with AI, hacking is going to be taken to a whole new level. So another thing that's going to happen to a whole new level is the analyzing the enormous amount of data that is collected in the world every single day and trying to detect terrorist threats, fraudulent activity, fraudulent bank transactions, someone leaving a bomb in Times Square. Every minute, millions of gigabytes of data are collected in the form of video, bank data, all of your emails, all of your texts. They're not private to you. When you send a Gmail or when you tweet on Twitter, Twitter owns those tweets. Google owns those Gmails. Now, it is private. They're not allowed to just put your emails in the newspaper, but there are laws in place where the US can request from Google or Twitter or Facebook or whatever, hey, I need to see James Altucher's emails from the past week. There's something suspicious we want to look at. And this was always part of the Foreign Intelligence Surveillance Act. It was made in like 2006, I think. And it was every few years, it has to be renewed. There's one section in particular, like which entities are we allowed to do warrantless searches of and request information from. And right now, this section 702 of this act is being renewed in Congress, but actually it's not being renewed. In fact, it's being quote unquote reformed, and they're extending the list of companies and people that they can ask for information from by a large amount. So basically, it used to be if you were in the business of information like Google or AT&T or whatever, or the business of communications, then it was fair game for the government to ask for information about specific people. And by the way, it has to be always related to foreign intelligence. But now, any company that has any information whatsoever, which basically means every company in the world, can now be approached by the U.S. government without a warrant or subpoena, and they have to give information. Now, this is all for good purposes because there's a lot more terrorism, there's a lot more foreign hostility in the world. We're in all these wars that are proxy wars and precursors to a potential World War III. But it has everything like this has its good and its bad. It's also, it's a scary thing that our lives are an open book and are constantly being collected. So, and now how do you analyze hundreds of gigabytes of data? Well, humans are not very good at that, but AI is incredibly good at that. The way AI works is if I wanted to train an AI system, I would show it. Let's say I wanted to train an AI to detect bank fraud. Like Palantir is in the business. Palantir, which was in part funded by Peter Thiel and in part funded by the CIA. Palantir is in the business of using AI to look at unusual bank activity and determining that there might be terrorism involved or fraud involved. So how would you train an AI system to do that? Well, you look at prior transactions done by terrorists, and you also look at prior transactions done by non-terrorists, and you feed them into an AI. And now when the AI figures out, oh, here's what terrorists look like, and here's what normal people look like. And now when you feed in something new, the AI determines, oh, this looks more like a terrorist, and this looks more like someone normal. And they do this with Palantir billions of times a day on every bank transaction you ever do. And but I'm not recommending Palantir, by the way. Palantir trades for 15 times revenues. It's like Greg mentioned earlier about NVIDIA. It's already had its AI run, but there are smaller companies that are even more aggressive and more active in AI and security than Palantir that are trading for 1 times revenues. So CGNT, Cognite is my predicted recommendation for this year. It trades around $5 a share or $5.70 a share. And there's something interesting about Cognite, and I want to back off for a second and explain a concept that's important for investing. Spin-offs, which is when a public company spins off a smaller public company, are very interesting opportunities for trading and investing in general. So I remember back in, well, first off, there's a great book by a hedge fund manager, Joel Greenblatt. It's called How to Be a Stock Market Genius. And his chapter 1 is all about spinoffs. He describes this phenomenon very well. And I remember at the time I was reading the book around 2002, Procter & Gamble spun off Smucker's Jam or Smucker's Jelly, whatever that company is. And here's what happens. When a smaller company spins out of a bigger company, the stock sells off. Why does the spinoff almost always sell off? Well, because the mutual funds that own the bigger company, like let's say Procter & Gamble in this case, or whatever company is the larger company, they don't want to own the smaller company. They just wanted to own the bigger company. It might be because of their mandate. Like maybe they can only own Dow stocks or a certain kind of stocks or a certain market cap of stocks, or maybe they viewed the spun-off stock as a dividend. So they just wanted to sell the stock and collect the dividend. But for about a year or two, the spin-off stock sells off. And this happens in almost 100% of the cases. And then once the spun-off stock kind of finds its feet and all the sellers are gone, then it starts to go up. So Smucker's was a great investment at the time. This is like 2002, and it had a strong return afterwards. Well, Cognite spun out of a company called Verint Systems. You're all very familiar with Verint Systems because let's say you lost your airplane ticket or you want to change your flight. You call Delta and it says, you can't talk to a human. For the life of you, you cannot get a human on the phone. You get this software that says, if your problem is with a ticket, say ticket. If you want to change your schedule, say schedule, and on and on. And that's Verint Systems. They do all of that customer interaction software for almost every company in the world. And they're very good at it. I'm not recommending Verint today. They spun out Cognite because Cognite is a bit darker. It's not a customer interaction company. Cognite, their customers are often countries, small and large, that need to take the enormous data they have about their citizens and figure out where the criminals are, sort of like Minority Report, or corporations that are dealing with companies that might be spying on them or employees that might be embezzling from them and so on. So Cognite's a bit darker, and Cognite is the one that will most benefit from this bill. By the way, the bill 2 days ago passed the House Intelligence Committee, is probably going to be voted on by the end of the year to revise this Foreign Intelligence Surveillance Act to greatly expand how the government can use it. Cognite is probably going to be the biggest beneficiary of this. So what they do is they basically have dashboards and AI that takes in all this data, whether it's video data, facial recognition data, government data, your emails, your texts, whatever, maybe phone calls that are happening live, depending on what the laws are in different countries. They definitely have been hired or attempted to be hired by countries that have not such good intentions towards their citizens. But Cognite is in the business of using AI and using all the latest advanced AI techniques to investigate for frauds and terrorism and criminal activity, sort of like a Minority Report. If you ever saw that movie Minority Report starring Tom Cruise or Colin Farrell, they had to investigate. They had to arrest people before the crimes were committed using AI. Well, that's 2024 is the year Minority Report is coming true, which is both good and has a darker side to it. CGNT, why do I like that? A, it's a spinoff. It's spun out of Variant Systems. B, people don't really know about it. Everyone knows about Palantir, but you want to always find the stocks that are not on the front page of the Wall Street Journal. The purpose of us having these kind of prediction seminars like this is because everything we've talked about here, you won't read in the Wall Street Journal tomorrow. The Wall Street Journal talks about how, Google is so great, Nvidia is so great, interest rates are coming down, let's have a party. They don't really tell you the real story, that the dollar might be losing its petrodollar status, that Ukraine is losing the war, that inflation coming down has a bad side to it also. It sounds great, but by the way, prices don't go down. The inflation that's already happened sticks. Like, prices are up for good, but the rate of inflation is going down, is not necessarily, has a good side, of course, but is not necessarily great. And you have to look at every side of it. So Cognite kind of takes advantage of these converging trends of AI and increased need for global cybersecurity. If you have a kid who's 18 years old, tell them to major in cybersecurity, or her to major in cybersecurity, because every three-letter agency in the US, there's like 14 different intelligence agencies inside the US government. They're all handing out free money for fellowships for people involved in cybersecurity. I know this for a fact. So that's it. And again, this is a company trading for only 1 times revenues. Palantir trading for 15 times revenues. Do other people own it? Big hedge funds like Citadel, Renaissance, Sigma 2, some of the best hedge funds of all time, particularly Renaissance, have all added shares of Cognite to their portfolio this past quarter. So very valuable. I will mention also on the crypto side that when you make a large AI model like ChatGPT, it takes an enormous amount of computing power. Like, to create ChatGPT, OpenAI used several supercomputers running nonstop for a year and a half to create version 0.1 of ChatGPT. And they still didn't finish the job. Like, humans needed another year and a half of testing to finish it. But in order to avoid spending that much computing time and avoiding the need for supercomputers, there's a great kind of side benefit of crypto, which is that it's decentralized. That if I own a Bitcoin and you own a Bitcoin, these and the Bitcoins are sitting on our computers, they're sort of talking to each other in a weird way through blockchain. Well, what if there were crypto tokens that could actually let you mine for more crypto tokens by lending, your computing resources to work on hard computational problems like developing large AI models? Well, there are several tokens like that. One of them I recommended in the crypto group is specific for AI, but there's another one, ICP. It stands for Internet Computer, and it's specifically made for this, that it takes large computer problems, divides them up into like 1 million pieces, and spreads them out, all the computing power out to everybody who has ICP tokens, who wants to lend their computing resources to get more ICP tokens. And these kind of decentralized computing tokens are going to do very well in an AI era, because it's just really, you will never not need an enormous more computing power than we really have access to in order to create better and better large AI models like ChatGPT. So that's the crypto token I'm recommending. And I just wanted to add just real quickly. I just saw some questions in the chat. Bank failures in 2024. I don't think it's going to happen. All the bank failures that would have happened should have happened already. Technically, right now, almost every bank is bankrupt because they're all sitting on treasury bills that are way underwater. But the Federal Reserve said, don't worry about it. We'll pretend like they're not underwater. And so the banks didn't fail. So now with the Fed cutting rates, this is a very good thing for banks. Banks are not going to fail. Digital currencies in general. I was in Norway recently talking to central bankers there, and I can tell you every central bank is looking at how to switch to a digital currency to do payments. Why? I met with Basil Koch, who's the developer in the early 70s of the SWIFT international wiring system, and it's just an antiquated system. It was made in the early 70s. There's fees all over the place. There's potential for error all over the place. Every country in the world needs to improve its payment system, and this is kind of the entry point by which many countries are going to get involved in digital currencies. Whether that's CBDCs or not, I don't know, but we are moving to a crypto world just to improve the payment system alone, and that starts a whole other discussion about crypto and tokens and Bitcoin and Ethereum and so on. We won't get into that. Security and AI were my topics for today, and a little bit more on the macro. But I want to, again, thank all the presenters who came before me. Very smart stuff. And I really appreciate all the people who are here on this call. It shows me and all of us that the only way to really improve at investing is to attend seminars like this, where there's just a lot of free thinking. You won't read this in you don't see this on CNBC or the Wall Street Journal. I know, because I used to write for the Wall Street Journal and be on CNBC all the time. It's an awful experience. And whereas this is a more fun experience. So in any case,
yeah,
this is my one break from being in bed from COVID. So thanks very much for listening.
Yeah, thank you very much, James. That was the definition of over delivering for sure. Can someone post in there the tickers? The ICP is the coin, and it's CGNT. Is it T? Okay, great.
Yeah.
Perfect. People are asking about that. All right. Well, we've got a lot of stuff. We're about to hand out our next prize. We got a couple of winners that we're going to announce here in a moment. Ken Burgess wrote, I just wanted to point this out. Would Paradigm consider having this type of event every 6 months? And I'll tell you what, Ken, I wasn't around when the Allied forces invaded Normandy. However, getting these 10 people on a call at the same time obviously is very difficult. Alan couldn't even make it, right? So it's not as hard as invading Normandy. I'm sure that Jim and Byron could attest to that, but it's pretty close. So, but we have an opportunity here today, which may be the second best thing. And the Omega Wealth Circle really is that opportunity. Everyone here voted on what they wanted more of in 2024, and that was repeatable gains. And we can't promise repeatable gains, but I can promise you the 8 gentlemen that presented today put everything that they have into the recommendations and the research to get to the recommendations that they offer you in Omega Wealth. All investing carries risk. We all know that. But if you want repeatable predictions, repeatable, really smart and intelligent, well thought through insights, and a dialogue like this where you get to have calls with each of these individual gentlemen one-off on an ongoing basis. You have a whole calendar of calls as part of the Omega Wealth Circle. That's the way to do it. And we've done it in a way that we've made it as low of a price as we possibly can to simplify it for everybody. So go ahead. It's 221spots.com. Someone could post that link again, and you can check it out there. All right, on to the gifts. We have 2 people, right? We have 2 people.
And it's 3, but I don't know. You name them, whatever the names are.
Oh, you're right. It's 3. There are 3 people here. It's we're offering up 3 Treasure wallets. So if you're invest in crypto, James and our compatriot Chris Campbell recommend Treasure wallets as one of the hard storage for protecting your crypto. So we have 3 winners here. We will ship them out to you. We have Deborah Austin from Texas. Oh, excuse me. Deborah B from Austin, Texas. Baird H from Grand Rapids, Michigan, and Brandon F of Worcester, Massachusetts. You all 3 have won a Treasure wallet, and someone from our team will be reaching out to you via email to get your mailing address.
There we go. All right. So here's another thing good. I didn't say this earlier, but I should have. What is it? Google has that AI assistant called Bard. Is that what it is? We at Paradigm Press have a person named Yard. Yard has been watching this whole entire, he's not AI, he is real, and he's one of our longest tenured employees, like 25 years at Agora. He has been watching this the whole time. He's taking notes. So we have what we're calling a roving report for this event that we're going to send out to anybody that was registered for this. We'll get your email addresses. We'll send it out as soon as Yard can put that together. So we wanted to make sure that you guys know about that. And we're going to head into the whiskey bar soon. And I want to respect everyone's time because let me, and real quick. Oh, Doug, you had already put the link in. I think the link is in the chat. Real quick, I'm going to share my screen. When you click on that link, you should get to a page that looks like this. Your master key is applied. What you do here, you can go in and you kind of see everything you get with this master key, with the Omega Wealth Circle offer we've got. And you scroll on through, right? You get everything that Jim has. You come down here, you get everything that James has. Then we've got Zach. Then we've got Alan. We've got Ray. And we've got Gunner. You get everything they're doing. But the only problem is we only have 221 of those spots there. So for right now, that's what you're going to want to do. Make sure you click on that link. You're there, and you've got everything you need to do to grab one of those spots today. I do want to respect everyone's time. We'll do Whiskey Bar. We'll probably be pretty quick here because if I go around on the screen that I'm looking at, James has COVID. Jim has been watching Jerome Powell and just writing notes and getting his after-market report done all this time. Sean it's like tomorrow where he is. So that's already happened. Byron, I don't know. He's probably got, with all those books, you got something to do, Byron. And then Zach and Gunner, they have so many kids that they've got plenty of things to do as well. So real quick, if anybody has a drink, we can sort of open up the whiskey bar. I know this is Doug's favorite time. Doug, you have eggnog? He's going straight eggnog.
Do we have something that we need to say now, or can I say something?
You can cheers. You can do whatever you want.
Well, I will definitely cheers. Paradigm Press undertook a project this year, and I'm going to shout out to one Sean Ring for doing a killer. Yep. No. Right there. You big guy.
That guy.
Killer job on our YouTube channel. And, certainly having the guests that we have on this call and others outside this call helps a lot. But boy, Sean kills it on our YouTube channel. If you're not a subscriber to our YouTube channel, you need to go to Paradigm Press Group in YouTube, search for that and subscribe. It's fantastic. We got content coming at least once a week, if not more. So kudos to you, Sean. Well done, and keep it going. I, on the other hand, have a fledgling YouTube enterprise. I think I have 6 subscribers total. Zach's one of them. And the only reason I have one is because I make Hill Family Eggnog every year. And I recorded it one time, much like Jim did last year or in 2021. He talked about his Vesper Martini, which I don't want to steal your thunder, Jim. But I mean, you could certainly do that again. I'm going to post a YouTube channel to the Hill Family Eggnog. And if you want to make it's delicious eggnog. I think anyone here that's had it would tell you it's my way of spreading holiday cheer, guys. That it's the only way I really know how to do it. Thank you, Sean. And I'll post that there if you want to check it out. It's a relatively easy thing to make. You can make a gallon in about 20 minutes. So I'll post that here in a second.
I would love to double Doug's subscribers. What would that be, up to 12?
Well, yes.
Here we go. Okay, why don't we open up the whiskey bar? Let's do a quick round robin. We've got some questions that are particular to certain editors, but one thing that I wanted to kick this off with is a question. This is kind of like out of left field, but it gets us away from the markets and it gets us into what would arguably be some more important things. But if you were to look at yourself, this is a question for the group. If you were to look at yourself and say, what was one trait that you attribute your success to? What is something that people could work on in 2024? What is a trait that you attribute your success to? Who wants to kick us off? Doug makes eggnog. That's his.
I would say, particularly with investing, really learn how to mitigate risk. Everybody on this call had good ideas, good investment ideas. There's a lot of thousands of stocks will go up over the next year, even if there's a recession, even if there's a bear market. But you cannot make money investing if you don't know how to mitigate risk. And you do that with extra research, with reading lots of different sources, with going to conferences or listening to people who are going to all the conferences and talking to all the people, managing your position size, understanding what it means to manage position size. These are all incredibly important skills. And that's for investing. And just in general, I would say one of the things that I've had to deal with over time, all of us on this call have spent a lot of time writing for a large marketplace of readers. And it's very important to focus on not focus on success, but focus on quality. That's a very important lesson that I had to learn early on, which is that success doesn't mean anything, but quality gives you a lot of pleasure, makes your readers happy, and being in the service of a cause that requires quality is very important. So those two things.
All right, who wants to go next?
I would jump in. I'll jump in and just say I would echo what James is saying. The risk management is incredibly important, because if you're a trader and you lose your capital, you are no longer a trader, whether you want to be or not.
Right.
But the other thing would be perseverance. You're going to get some wins and you're going to get some losses. There are days that you're going to get your teeth kicked in. It's just the way that investing and trading works. Markets ebb and flow. But if you persevere, if you stick with it, if you learn from mistakes, if you learn from pullbacks, and you continue to advance yourself and you learn what you can along the way, that perseverance will pay off over time. So I don't know. I think that's been a really big part of success, probably for all of us over the years.
Yeah, Matt, I'm going to have to jump, but before I sign off, I'll answer the lightning round question. I'm an autodidact. Whether that's a good thing or a bad thing, I don't know. It's just the case for me. And so I would say reading, particularly history, is one of the most enjoyable and also valuable things that I do in terms of processing it and turning it around into analysis and output of the kind we do every day.
Awesome. Well, Jim, we can do this as kind of like in college basketball when like the seniors, like they're celebrating them. If you've got to go, we appreciate you. You can leave on that high note. I mean, I think that's a great one for 2024.
I just have one thing. It actually takes longer to explain the Vesper Martini than it does to make one, because some of the ingredients, if you go back to the original Ian Fleming / James Bond recipe for the Vesper Martini, which I have, some of the ingredients are no longer made. So for those who make a Vesper Martini, you say, okay, what is the closest possible substitute for something that no longer exists to get to the original composition of Vesper Martini? And just not to get too in the weeds, but involves the bark of a quinona tree from Peru and how that goes into a certain kind of liqueur. So I have all that information. I have the updated recipe for a proper Vesper Martini, or at least as close as one can get to the original. Maybe we'll do that in the next whiskey bar.
Yeah, that could be one of your next 5 links. Maybe for strategic intelligence, you put a link in there that shows people how to do it. I think that would be well worth it.
Okay, well, thank you. Thanks to everybody. Great being with the whole group, and we'll see you soon. And Merry Christmas and Happy New Year's.
Thanks, Jim. Same to you.
Awesome. Thanks, Jim.
Likewise, Jim.
Well, let's keep going. We've got Q&A coming up. We've got all kinds of things. Who wants to go? What is a trait in 2024? Because we've got Byron, we've got Guenthner. Who wants to go up? Who's next?
I'll chime in.
Sean.
I think it's very important to approach what you do and who you do it for with as much respect as you can put into it. It's easy to just be dismissive, whatever. No, I mean, like with the readers out there, the viewers out there, you have no idea how much I appreciate having you out there. When I sit down at a blank screen in front of me, it's like, okay, I have to explain something to people, and I'm trying to find that media. I don't want to talk down to you. I don't want to talk over your head. I want to try to find the sweet spot, and it forces me to crystallize my thinking. I have to go back and back and back to what I want to talk about. Is this the right word? Is this the right way to say it? Because I want to explain these things in ways that can come across, and then that applies to the companies that I look at. I don't just do these sort of like little butterfly, land on the different companies and, oh yeah, look at this. No, I do deep dives into these things. That's why I travel so much. That's why, Matt signs off on my travel claims all the time. I mean, I go there, I pick up the rocks, I talk to the geologists, I stand on the drilling rig. I mean, I look at this stuff coming right out of the ground. Last week I was in Cape Canaveral. I mean, a whole nother thing coming from that, and I mean, holy smokes. I mean, but it's a deep dive. I mean, I like to think that I approach it with just the utmost respect for the people out there who trust us to give them the straight scoop. I mean, when I talked earlier about Ukraine, I've been following this as hard as I can. I read things in 3 different languages to try to, find out what's going on. And, and that's where I'm coming from.
All right. Who's next?
Did we get everybody?
I don't know. Sean, Gunnar, did you guys go? All right. What's a trait you attribute your success? You are a successful. I know you. You're smart. You know what you're doing. You're a good trader. There's a trait in there, my friend.
I think what's really important, and we talk about risk management, and that's incredibly important, but I think it's also important to know when to take the risk as well. And I think that when, we're surrounded by really smart people, and I love being in this room because I'm not the smartest guy in the room, and I think that's critically important for everybody. But what's also critically important is not to get so overwhelmed by the information that you can't process it. I was at a conference once, and a really good friend of mine was there with me, and I was kind of like, stars in my eyes. I'm like, oh, I know that guy, I read that guy. I'm like, oh my God, this is great. And he leaned into me and he said, Shawnee, when you get to know these people, you'll be a lot less impressed. And I laughed my ass off. That was the funniest thing. And obviously, like, these people are great and everyone's awesome, but keep your head about you. Understand you've got qualities that not everybody else has. I don't want to be Jim Rickards because there's already a Jim Rickards. I don't want to be a Byron King because there's already a Byron King, or a James Altucher because they're already there.
You definitely don't want to be me.
Yeah. I'd love to have your hair though, but it's brilliant to have these resources and then go, okay, well, what can I bring to contribute to the party that's unique and genuinely my own? I think that's also important. So I don't know if that was one thing or 5 things or whatever, but that's what I can think of at the moment.
All right, Gunnar, do you have a trait that you would give everyone for 2024?
Yeah, I mean, I would build on some of the things that everyone has already said. Risk management is obviously super important. Knowing when you're wrong, learning to know when you're wrong in a trade and when to get out is such an important skill, I think, because opportunity cost is such a big deal. We have limited capital to put into these plays, and to make sure your money is going to a place where it's not just going to languish there, where it's going to work for you. That's super important. And understanding that, hey, if I only have spot for this many trades, then I want to make sure they're in the best places they can be.
Yeah. It's good insight. I mean, the one thing I'll say, it connects up to what we're doing here, but it's, I read all the stuff that we publish, and a lot of folks I see, and I read all the reader comments that come in, and I see people, they'll read something from Jim and they'll be like, oh man, that's doom and gloom and this and that. And they're like, but the markets are going up. And it's not one or the other. It's not listen to just Jim or listen to just James or it's this broad scope of all of this research that's helpful. Because what Byron said on the call earlier about the petrodollar, say we just take that one piece out. Say Byron was too busy for everyone today and he couldn't make it. And he doesn't give that one talk. That piece of information that the petrodollar could unwind in 2024 is very, very valuable. So my insight for anybody, or what I think is a trait of success, is being able to research and see a lot of things and make sure you're keeping them in mind, because as life goes by, you might need to know that thing that you learned. You might need to know, hey, the whistle has just blown and everyone's leaving the dollar. What do I do? I got to get safety. How do I do that? Oh, well, it's gold, or it's Bitcoin, or it's this or that. And you can do that quickly if you're knowledgeable. So go ahead. If we haven't, I think the moderator's got the link in there a bunch of times. If you haven't done it yet, go to 221spots.com. See if there's a spot left for you there for the Omega Wealth Circle. Get that master key to everything that we publish. Doug, any traits from your side that you think would be good in 2024? And then from there, what questions do we have for the group?
Okay. Well, I think for me, I was instilled a good work ethic, right? And that's hard to learn at our age. My father put me to maybe go around and work farms in Stratham, New Hampshire when I was 13 years old during the summers, because he couldn't stand how crazy I was as a kid. I was kind of a little bit of a spaz, I think. And like I said, that's kind of hard to learn at this stage, but I'm not going to bring anything new to the table that you guys haven't already brought. Following, money management rules. Bob Byrne talks about that all the time. That is key. It's not just chasing the big wins. It's not losing. So, or not losing too big. Yeah. So anyway, that would be mine that I would vote for.
All right. Real quick, we've got some different questions. Q&A. Who is that? You can go ahead.
I was just going to say, we do have a couple more giveaways.
Well, why don't we do those? And then I've got a question, and then we can keep rolling for a little bit. Okay.
Well, and I don't know if we've made a big enough deal about this on this whole call. So the people who are still here, they're in for a treat.
Many people.
So everyone's been to that link, 221spots.com. They know what that value of that service is. We're giving away 2 of those subscriptions right here, right now. So let's do that, and then we'll go to the Q&A. What do you say?
Let's do it.
Okay. I am looking, and I see 2 people. John Thomas Tolhurst of Bostic, North Carolina. And Saul, I apologize, I'm going to butcher your last name, Estreicher, I think it is, of Bridgeport, Connecticut. You both have won a lifetime subscription to the Omega Wealth Circle, which, if you were to buy each of these subscriptions individually, it would be, I think, north of $53,000 or $55,000. Mm-hmm. They just got that for free for life.
Awesome. Well, congrats. And anybody that won anything, we'll be reaching out in emails. The other thing we didn't say about some of the stuff that we've got here, we do have new publications coming out soon. We have something called the Paradigm Mastermind Group that no one knows about, but it's launching 2 weeks from now. It's going to be something that you're going to want to hear. It's got deep dive into hot sectors, and we bring all of our brain trusts together and say, how do we make the most out of the AI sector or what have you? So that's called the Paradigm Mastermind Group. That's a premium research service. We've got the trading desk. I think Greg Guenthner had to jet out of here. He wrote me a side message. But the trading desk is back. He's got one of the hottest track records on the year. That is technically new and it's ready. There's no way to buy it other than joining the membership here. And then we've got the Paradigm Venture Group, which has been around for a little while, but it's an amazing private deal service that we've got. Sean has popped back on in his video. So Sean, I am going to hit you with one of our Q&A questions. You do the YouTube channel. You've had a bunch of interviews. And again, you don't have to be nice to anybody here because you're the rude awakening anyway. Who's one of your favorite people, even if it was not even on our YouTube, who's one of your favorite people that you've ever interviewed? Oh, you're on mute though.
Sorry, there we go. I didn't want to hear the on the thing. Anyway, now I've been incredibly lucky. So Byron and I speak all the time, and I love your history lessons. By the way, Byron, before we go, someone was asking about your submarine, and Douglas asked me a question. The answer is no. But someone asked about your submarine, Byron, so we're gonna have to explain that in a second. So I've had Byron. I had Jim on, which was awesome. Which we need to list, by the way. And we've got. I also had outside of our circle Rick Rule and just had Mark Faber. And tomorrow I'm going to have Tom Luongo. And what's been fascinating, and this again will go, I think, kind of to what everybody is talking about, that the common thread, and this really came through with Faber because last night he was talking about all the things that he looks at. And he was talking about like the Pakistani stock market. He's like, it's really undervalued right now. And I'm like, who gives a shit about Pakistan? Like, how do you know this? And he just, he talks about, the market capitalization. He does everything in US dollars. But the main point that came across, all of the excellent people I've been able to interview, is the depth of their knowledge. Like Mark Faber said to me, he's like, listen, I look at stocks all day. He goes, some people go to horse races. Some people do other things in Asia that I'm not going to mention. But I am, yeah, we're going to have to edit that a little bit. But
We're live, baby. We're live.
No, we're gonna have to edit his interview a little bit. But he just stares at it all day. He loves it, and I think when like Byron, obviously with his history, and that's why everything Byron writes, I try to stick in the root. James, when he's talking about stuff like I said, like I am not joking. I have my crypto portfolio with 3 of James' picks that I am looking at, and right now it is up 54.93%. And it's amazing because I don't even know what these coins are. Like, I trust James because he knows this stuff and he's staring at it. So I don't have to stare at it. And that's not a made up number, 54.93%. So the incredible confluence, okay, the thing that kind of where everyone meets in the middle is just the deep dive that everyone does. And for me, because I write the rude, and I feel like a filter brain because I write, 5 articles, a week plus a morning reckoning. Like, I can't remember what I wrote last Tuesday. So I'm blown away by, oh yeah, that was trading, 35% ago. You should have got that. And Rick Rule's like, the easy money was made in uranium. You missed that trade. Got to do this trade. I'm sitting there going, man, I'm just trying to find like 1,250 words a day. You guys are amazing.
Yeah.
So
Yeah.
it's
Why don't we,
brilliant. It's a treat.
James, could we go to you for that same question? Because you have a podcast. You just came off of doing a podcast. So this one's going to be loaded because you've interviewed tons of very important, famous people. Who is someone that you would consider one of your favorite interviews?
Oh, a lot, actually. It's too many I've had over 1,500 guests over the past 10 years, which the hard part is I'm constantly reading because everybody has a book that they come on because usually they have a book they want to promote, whether it's Richard Branson or Mark Cuban has a new TV show or, but I don't know, a lot. I can't really answer. A lot of people have had a big influence on me. I feel my life has really benefited from talking to all of these people because I basically use the podcast as like my personal therapy session. Like, I pretend it's not a podcast and I'm just telling all my problems to them. I suppose Robert Greene, who wrote the 48 Laws of Power and the book Mastery, he's a really great guy, a great human being. Arthur Brooks, who just wrote a book with Oprah about happiness, is a really great guy. Very valuable. Just so many people I've had on that have been really interesting to me.
I would imagine that's very difficult for you to pick one. I mean, you've done hundreds.
Yeah,
hundreds.
1,500 podcasts.
Yeah,
And
that's incredible amount of effort to put into that. You got over 40 million downloads, probably more than 50 now, I would imagine.
oh yeah, that was the 2018 number. Now it's over 100 million. But like recently I'm really grateful. Recently I had on David Rubenstein. So who's he? He manages the Carlyle Group, which is it's a private equity group that manages $500 billion. And almost every ex-president has worked for him at some point at the Carlyle Group. And I had him on. He came on. He didn't have anything to promote. He came on just because I've helped him with stuff in the past. And he said, what are we talking about? He's kind of curmudgeonly. He said, what are we talking about? And I said, I'm really confused about the economy. And I figured you would know some things I don't know. And he's like, okay, yeah, ask away. And for the next hour, I just asked them all sorts of questions about the economy, and it's just fascinating stuff. I talk to the most fascinating people all the time.
Matt, I've got a question I found in the chat I'd like to throw out there, because we have not talked about this, and this is a really important part of the Omega Wealth Circle. And it comes from Norma, and she asked, is this new service included in the Omega Wealth Circle? And that's a really good question, because yes, in a word, it is. And the thing about the Omega Wealth Circle is that any new service that we bring on board at Paradigm Press automatically goes into the Omega Wealth Circle, meaning if you're a member, like we had members on this call today, any new service, these new services that we're talking about launching and developing over the next month and into 2024 will all be part of Omega Wealth Circle. So that's a really important aspect of this benefit of this value of the service just growing over time. Having said that, I do have a question here for Byron. Byron's your talk was about the petrodollar collapse, and we want to know, what is your biggest fear as the petrodollar collapses?
Well, the big fear as it collapses is it will be the immediate, repatriation of, literally trillions of dollars around the world back to the U.S. I mean, it'll hit like a tsunami of dollars or something like that. I was talking with a very good friend of mine just the other day, and he owns a place out in Tucson, Arizona, up in the hills, I'd say, in this development. And he said that there was this lady down the street who put her place on the market for, let's pick a number, $600,000. And within about 24 hours, she had about 18 offers. 14 of them were international offers, sight unseen, got into a bidding war and sold the place to for 1.6 million, $1 million over asking, to a person in Europe who paid cash, sight unseen, just completely on. Okay, somebody wants to get their money out of Europe or out of wherever it's at and put it in, U.S. real estate. Now, if you're like Joe American out there, if you're like the normal, just American person, American citizen, you're born, raised here, you went to school, got a job, you pay your taxes, your kid's in the army or something like that, and you want to buy a house in the United States, you have a problem. You have a problem right now. You have a problem with high interest rates. You have a problem with, permanent capital, corporate money, BlackRock money coming in, buying entire development, stuff like that. You already have a problem. You're going to have an unbelievable problem when all that petrodollar money that doesn't have a use anymore financing oil tankers, when all that money comes racing back to the US. So, I mean, there's going to be a gazillion different angles on this, gold, oil, energy, price of food, price of real estate, but it's going to dislocate the economy in ways we cannot imagine. We have borrowed all this money on the national credit card, and we paid it to ourselves in the sense that, the government distributes it for this and that, whatever, whether it's, giving it to the war machine and, the Lockheed and Raytheon, or whether it's, everything else that, all that other money that goes out there. I mean, what is it, like 22% of the economy is healthcare, sickest country in the world in some respects, but we spend all this money on healthcare. There's going to be hell to pay, which is why I don't want to sound like a broken record, but I can't tell you when next year, on what day of the 365. I don't know when it's all going to crack and fall apart. But if you're out there watching, if you're still among those diehards watching, please get this into your head that something bad is ready to happen with the petrodollar, and watch it. It's kind of like when you're in the Titanic and you hear that scraping sound on the hull. Get upstairs, get to the first deck, and get on one of those lifeboats. Okay, if when I said don't wait until that happens to buy your gold or buy your energy or whatever, but you know what I'm saying. So that's
Byron is no lack of analogies. He's got dams breaking, houses blowing up. You're on the Titanic.
And Byron, it's such great points, because at first it might seem like a good thing, like, oh my God, I just sold my house for 1.6 million instead of 600,000. But after that initial party is over, where all the dollars are coming back, there's no more dollars left, and the value of the dollar collapses, and the US can't print money to get out of a financial crisis anymore.
Yeah, I mean, the idea of owning. Somebody on the chat room says, well, why should you buy stock? Why should you buy Chevron or something? Well, at least Chevron owns oil wells, I mean, unless the whole legal system breaks apart and somewhere somebody nationalizes the oil industry. I mean, if you buy companies that have real assets, oil wells, gold mines, mines, mills, factories, and that includes intellectual property too, patents on AI, patents on biotech, patents on pharmaceuticals, whatever. When you buy real assets, even indirectly through stock, at least you own something that will somehow appreciate. And here's the other thing. We can't live in a hyperinflation world. You cannot do that. Look at Weimar Germany. They had a year and a half of, inflation, then everything crashed and they had to start all over again. The reason you want to own, gold, silver, things of real value is that during this major transition, you're going to come out on the other side owning something that you will then be able to denominate in the next currency of whatever it is we're going to use, whether it's seashells or, colored pretty stones, or whether it's some sort of international, drawing right or something like that. I mean, my desk is famous for these Zoom calls or whatever. I hold in my hand it looks like a silver dollar, but it's actually a trade dollar from 1877, minted in San Francisco, California, with silver from the Comstock lode of Nevada. And the U.S. used silver dollars from 1788 when we founded the country. The U.S. Mint was established in 1792. Up until we took silver out of circulation in 1963. I mean, a dollar was a dollar was a dollar was a dollar. A silver dollar, and then we went off the silver standard. Nixon took us off the gold standard. We went on the petrodollar standard, and the value of the money has just been crazy ever since. There's a difference between just sort of the currency in your pocket and the true value of what it is that you own. You can own a house and the price goes up and down, but if you own a house, at least you own the house. So I hope people are picking up on the message out there.
Yeah, Byron, what's the submarine? We need to know the submarine answer.
Okay, here it is. I mean, obviously it goes back to my Navy days. I was in the anti-submarine warfare business. I flew an airplane called the S3. You can look it up on Wikipedia. It's out of commission now. They're all in the boneyard in Davis Mountain, Arizona right now. But so I knew a lot about anti-submarine warfare and submarine warfare. And I was on the staff at one point in my Navy days. I was on the staff of the Chief of Naval Operations. And it was the end of the Cold War. We could see things coming, and the Navy was building these big, expensive, super duper submarines called Seawolf class, and they were too expensive. We just couldn't afford them, So the Chief of Naval Operations put together a Tiger team and said, "Come up with something else." Well, I happen to have a small role in all of this, and at this point, I'll just say that people who talk a lot about submarines don't know much about them, and people who know a lot about submarines can't talk about it too much. All I'll say is that out of our deliberations came the design for a thing called the Virginia class. And this guy right here is a Virginia class submarine. And I keep that as a memento of my very small, contribution as a naval officer to the thinking process that led to a transition from super expensive Cold War era submarines to something that the Navy could afford and build. I had a little bit of a role in playing that. And
it's too bad the Air Force didn't do that with the F-15.
That's how you do the humble brag from the Navy right there. He's like, well, I can't say this, but okay. Why don't we wrap this up? We want to be we're cognizant of everyone's time. We appreciate everyone being here. I'll do one last quick push for everyone. And again, this might sound silly, but it is what it is. Look, if we go, I'm going to share my screen. Let me do this real quick. So go ahead. If you haven't already, 221spots.com, go over there, check it out. When you go there, the other thing, I didn't scroll this far down. We don't have a merchandise shop. The only way to get some of these things is to become one of our loyal Inner Circle members, which is the Master Key Omega Wealth Circle. Look at these things that you get. This is good stuff. And I wanted to do this because I forgot. again, we didn't do a little cheers. So cheers to everyone at home. If it's 5 o'clock where you are, we'll do a quick little drink. But this is just some of the stuff that you get once you scroll down through that page. So I wanted to make sure you saw that. The other thing I'll do, I just got this picture a couple of days ago. I don't know how it took me so long. This was when we were in Las Vegas. This is everybody. This is our Paradigm crew. This picture made me happier than anything. Well, all right. I had kids. I got married, all that stuff. Fine. That's great. But I saw this picture and I got really excited. I was like, man, this is a great team that we work behind. So I wanted to make sure I gave thanks to everybody, everyone on our tech team. We did this thing flawless, got everything up and running. Same thing when we were out in Vegas. So everybody that works behind the scenes here at Paradigm Press, we appreciate you so much. So if you're on the fence about joining, using your master key, joining Omega Wealth Circuit, becoming a lifetime member here at Paradigm Press, remember all those folks. I mean, we got a ton of smart people that are behind the scenes working on stuff. So go ahead, go to 221spots.com, see if there's still a spot left, and you can grab yours now. I'm going to go around just last words here. No more questions. If you guys have anything else or just want to say goodbye to everybody, we'll kick it off. Who'd like to kick us off with last words?
I think some of our Omega Wealth members have said it best. And I'm just scrolling through here and I just see people saying Omega Wealth Circle was the best investment I've made in a long time. It's very much worth it. This one's from a guest. Says the best financial investment we have made, bar none. Still trying to keep up with all the important info. Just consider the value of these conversations alone are priceless. And I think that's why we do this.
Yep. All right, what do we got? Sean, what's the last word? Anything for anybody or just happy holidays? It can be anything.
It's thank you very much for everything. Thank you for reading. Thank you for taking the time to spend with us. Merry Christmas, Happy New Year. I hope you had a wonderful year this year and you found us extremely useful. And I'm looking forward to a great 2024 with you all, if you're going to be around. So thank you.
Cheers to that.
Cheers. All right, Zach.
I'll just sort of echo that and say, guys, thank you so much for being on the call. Thank you so much for being part of our family here. It really is special to have the opportunity to speak to you guys on a day-to-day basis. For you guys on the call on the screen right here, thank you for the chance to work with you guys. I feel honored and privileged to spend time with each of you guys each day. And let's make 2024 the best year ever. I'm excited. It's going to be an interesting year. There are a lot of moving parts, but that's what makes it exciting. And I can't wait to pull the trigger on some of the opportunities that we're tracking right now.
We appreciate it, Zach. Byron, what are the last words?
Well, I certainly appreciate being here, and I absolutely appreciate our wonderful subscribers, and people have been, chat boxing all day here, all afternoon. I'm so sorry I couldn't read everything. It was just kind of coming by so quickly, but appreciate your interest in what we do. We do this for you. I mean, we're a subscriber-oriented hub. We don't take advertising. People can't. We're the most expensive real estate in town in the sense that you can't buy it. You can't buy your way here. If I like your company, I'll write about it. If I don't like the company, I won't write about it. And we do this for you. You are the clients out there, and we're that's where we're coming from. One real quick advertisement here. This week, Jim Rickards' Strategic Intelligence is coming out, I think, on Friday. If Frank can get everything put together and out, it's going to be epic. It's going to be great. Jim's doing a deep dive into artificial intelligence, and I'm going to write an article about Cape Canaveral and outer space.
Awesome. That's must read.
Good one.
All right.
If you're not subscribed, it's not too late. Get on there.
Here we go. James, what do we got? What are the last words?
Yeah, I just want to say, like, Byron, Ray, Doug, a bunch of us went to investigate this company out in Florida, that's doing stuff with space. And when I was thinking of, okay, who am I going to call later? Who am I going to call from the company later to follow up with some questions? I was thinking to myself, the first person I have to call actually is Byron, because he just really did. He knew so much and had so much thorough research on the company and the industry that Byron, I want to call you to follow up. So what I'm saying is everybody knows so much. It's such a pleasure again to work with everybody. But I'm always so impressed with our readers and how they show up for things like this. Just it really investing is hard and it really takes a lot of dedication. It took me a long time to learn how to invest and trade and I failed for many years at it and suffered for that. And I wish I had experiences like this that I could have gone to and a community of people that I could have approached and befriended to avoid making some of the mistakes I made instead of making them the hard way.
Well, James, the fact that people are here to watch and hear what you have to say is a testament to you learning. I mean, we still got 3,000 people on this call. We've been on this call for 3 hours and 45 minutes.
Some may call me the worst, it would be publisher, but some would be boss. They'd be like, this is the worst boss in America. I'm like, we're on a call for 3.5 hours. But this is what it's all about, guys.
Matt called me a few hours ago and said, fuck your COVID. You going on this call, no matter how sick you feel. And
that's a good resolution for me in 2024. I need to be tougher on these things. I need to drop some F-bombs. Oh my gosh. No, I appreciate you guys. Doug, what were you saying?
Oh, I forget now that James is dropping the F-bomb all over.
Hey, we got, this is all the people that are here are the good people. The good ones are left. The one thing I will say, we always want to do more of these. We saw that in the comments, like, hey, can we do something on the East Coast instead of Vegas? Can we do more of these quarterly or whatever? We want to do all that stuff. And at Paradigm now, we've got some more momentum. We've got a bunch of readership. And the good part is if you're part of Omega Wealth Circle, for general readers too, we want to do more of these things just in general. We like what we publish here. But if you're Omega Wealth Center, you'll be front and center. We'll give you the invites to these things. You'll have invites to things like Vegas, or if we do something on the East Coast, or if we've got any trips that we're able to go on where we can rub elbows and drink a drink or shake hands together. We appreciate it because when I was out in Vegas, I mean, it's uplifting just to see people. They realize we're not fake. And the other thing I'll say about these guys, I said it earlier in the call, but like these are all real people and they're very good. Like I've been in the industry a while. I have seen a ton of crazy people. And they're not really good people and they're saying things or they're not researching or they care about money more than people, that kind of stuff. We don't have those people around Paradigm. I mean, we've got a very good stable of people that are really good people. So we'd like to bring you into that inner circle. If you can, click the link, 221 spots, see if anything's left. Otherwise, Doug, unless I'm missing anything, I'll say my farewells. I appreciate everyone tuning in today. This was a great event, and we'll send around the roving report. And Doug, I'll let you round it out.
Yeah, I hear it all the time. Everyone says, hey, guys, thank you so much for everything you do. And what you do provide is valuable, but we can't do it without the people on this call, and meaning the viewers, meaning the people that show up and they're interested in learning from this group. And we can't do it. And we're lucky. We get to do what we love to do. And you guys are a big part of that. So thank you all. 3,000 still sticking around for 3 hours and 45 minutes after is great. So thank you all.
James has to work on Christmas. James, you're working on Christmas.
We did just talk about doing a video call.
James has to run his presidential campaign through Christmas. I mean, he's running for president. He's not on the ballot, but he's registered to run for president.
I am on Ballotpedia though, which lists all the candidates for president.
Oh, there's a write-in. You got 3,000 new write-in votes, right there.
I was thinking of calling since I didn't list the party. I was thinking of making the political party the New Year's Eve party, so that every day in my presidency, every day will be like a new year.
I don't know what that means, but okay.
All right.
All right, everyone. Thank you so much for tuning in. We appreciate you being here. Go ahead, click that link. Once this Zoom ends, we're all gone. So go ahead, get that link now. It's 221spots.com. Make sure you got it in case we said it a billion times, but in case you don't have it. And we will see you next time we can all get together. Otherwise, stay tuned to Paradigm Press. Give us a like, and we'll see you next time. Thank you guys. I appreciate it.
Thanks, everyone. See you.